And here are your top stories. Stocks and futures trade higher as investors look ahead to the crucial US CPI report. Treasury yields slip for a second day. Japanese Prime Minister Kishida nominates Kazuo Uda to lead the BOJ, paving the way for a shift, potentially, towards more hawkish policy. The yen gains. Plus, US and China diplomats, well, they're said to be considering their first meeting following the Chinese balloon drama, which led to a new spike in tensions.
So, Tom, this is what futures are telling us. First of all eyes on BOJ, so we'll see, and we'll look at all the yen moves. And then a lot of these markets are actually on tenterhooks because it's that U.S. CPI data later today. And so for the moment, they're pretty much flat, maybe gaining a touch, around 0.1% higher overall.
Yeah, it is all about that CPI print, of course. The forecast for 6.2% year on year for the month of January. Of course, trading desks gearing up and putting different weights on which components within that inflation basket are going to be most central for these markets going forward. You had the likes of JP Morgan, though, Mr. Kalanovic, but also Mike Wilson over at Morgan Stanley, singing from the same hymn sheet saying, avoid these equity markets. Move into bonds was the call from Kalanovic. They are more accurately pricing the risks around inflation and rate hikes. The FTSE 100 currently gaining 0.2%. Talking of inflation, wage data out of the UK for the last 3 months of the year coming in at a record high in terms of the speed to which that's gaining, 6.7%. The BOE, again, under renewed pressure in terms of the focus on additional hikes coming through at the next meeting. The Spanish IBEX gained 0.3%, over in France, adding 16 points. Let's bring it over to what is happening cross-asset. Of course, we're looking at the Japanese yen. Yes, Mr. Ueda, Kazuo Ueda, has now been formally nominated by the Prime Minister Kishida. He could be taking over from Kuroda on April the 8th. Futures, though, stateside, range bound. Here's the yen, 132, little bit of weakness coming through for a US dollar, a little bit of strength for Japanese yen, 0.2%. Of course, the big question is, to what extent, how quickly will he reverse yield curve control? Does it happen later this year? 10-year stateside, you're seeing, yields were coming off a little bit, but 369 currently on the benchmark, not on movement. Currently, oil in focus, $79 a barrel, down 0.8% on the news that the US, the Biden administration is looking at releasing more oil from those strategic reserves, potentially offsetting that planned cut by Russia come March.
Now let's get over to our Bloomberg MLive managing editor, Mark Hudmore. Interesting to see bond traders are actually pricing in an end to negative rates around the middle of the year. So, Mark, you're, of course, good morning, and you're looking at the pressure that the BOJ is under to change policy.
Yes, absolutely, Fran. Follow me down the rabbit hole of Japanese inflation and I'll explain the dynamics. This is a chart going back over the last 30 years where Japan has been struggling with a deflationary threat for a lot of that time. This green dotted line is the Bank of Japan's target inflation at 2%. Now you can see there's been 4 episodes during those 30 years where they have flirted with that level, but they've never been sustainably there, which is why they're very, very worried about deflation. The red line is 0%, and you can see that for most of these periods, they spent extended periods in deflationary territory, multiple times, most recently post-pandemic. So there's a deep-seated fear that this is just another false dawn like the previous 3, and therefore we're not going to get sustained inflation. So let's break it down. This purple line is headline inflation in Japan. 4% for 9 months in a row. It's been above the 2% target. Sounds like something should be done. The yellow number is what is called core in Japan. Now, core in the rest of the world is ex-food and energy. Core in Japan is actually only ex-fresh food. It's pretty similar to the headline number, also 4%. In fact, most people in Japan watch what is called core. That's ex-fresh food and energy. That is 3%. It's at the highest level in that 30-year period. It is that number there that most people are saying now is the reason the BOJ finally needs to tighten policy or they risk getting behind the curve. But wait, there's one more line in this, and that is this blue line here. Now that is what you might want to call core. It's not normally called anything, so I've just made up that name before people start looking that up. But this is most similar to core around the rest of the world. It's ex-food and energy. Note, not just ex-fresh food, but food including alcohol and beer sales, which have risen. That number is only 1.6%. Not as high as the peak we reached in 2014. Not as high as the peaks we reached in 1997. Both of those times we got above target. It's still at 1.6%. And there's people that are focusing on that number and the fact that wage inflation doesn't still look like it's running away in a spiral, and the fact the potential growth in Japan are lower, that is going, there's no way the Bank of Japan can abandon its yield curve control policy yet. It's far too early to abandon easy policy just when they're flirting with inflation. That's why this Bank of Japan story is so interesting.
Taking a trip down the inflation rabbit hole, the Japanese rabbit hole, inflation rabbit hole with Mark Cudmore. Brilliant stuff. Thank you, of course, MLive Managing Editor Mark Cudmore on the granularities and the complexities of the inflation conundrum facing Mr. Ueda, the new BOJ governor. Now, traders will be eagerly watching, of course, US inflation data due out later today for any surprises that could see a repricing of the Fed's rate path. Economists expect monthly CPI growth to accelerate in January to 0.5%, while slowing year on year to 6.2%. Joining us now is Sonia Martin, Chief FX Strategist at DZ Bank. Sonia, good morning. What are you going to be looking for within this CPI print? Which component is going to be most important for you?
Well, obviously, the most important thing is to see to the extent to which inflation is threatening to be sustainable long term. So, I mean, we've obviously seen inflation rates in the US come off considerably, and I think markets have been becoming very optimistic on this front. It's almost like 6% inflation is treated as though it is actually below 2%, which is, of course, a long way from where we are today. So what investors will be looking for is, those components of the inflation rate that give us a signal as to how quickly inflation is likely to come off. So those components that are more volatile. And, the risk clearly is that if inflation comes in as expected at 6.2% or even slightly below that, that investors will take this as an opportunity to speculate again more in force about, rate cuts from the Fed later this year. And that, I think, could also put the dollar under some pressure this afternoon.
So, Sonia, monetary policy effects, of course, on the economy always happen with the delay. So how much is inflation coming down? And we've seen, we hope, the worst of this very high and distressing inflation. How much of that is the Fed's work, and how much is a natural cycle of inflation?
Well, I think it really is a combination of things. As you said, there are very long-term effects at work here, and it takes about 6 to 12 months at least for higher interest rates to feed through to the inflation. And we have to remember that inflation that we have seen last year, in the last few years really, is a sort of an unusual type of inflation because it is driven by special factors. I mean, obviously, energy is not as big a problem in the US as it is in Europe, but still we had the corona supply chain problems, etc. So all that's changing the game a little bit, and it makes it very difficult, I think, to give a good estimate of how quickly those effects will diminish and what impact the Fed is having. But having said that, the Fed has obviously pursued a very aggressive strategy. So clearly that is having an impact on the economy. And while the labor market is still very strong, as we saw recently, fact is also that a lot of the early indicators on the economy are now pointing to a severe slowdown, looking into recession territory. So that's clearly the Fed's doing.
Mm. So what is then the upside potential for euro dollar if indeed we get a softer than expected CPI print?
Well, if it is significantly lower than expected, and so we're talking price less than 6%, we'd see euro dollar move up quite quickly, I think. We had recently tested the area of 110, didn't quite manage to go through there. I think that's a bit too far for a sort of intraday reaction, but definitely heading back into that area should the CPI reading come in much lower than anticipated. And remember, we also have to look at the core rate. It's not just the headline rate that we need to look at. We really also need to look at the core rate, because that gives a better idea really of how deep-seated the inflation pressure in the economy is.
Sonia, when you look around the world, where's the most exciting FX currency or FX pairing?
Well, to be honest, actually, you just talked about it earlier. I think Japan is one of the most interesting cases right now. I mean, I didn't think I'd live to see the day where Japanese monetary policy is actually exciting again, but it has become very exciting. And I think the market reaction to the nomination of Ueda is a bit, well, it's very tame. You know, dollar yen hasn't really moved very much, but I think there's a lot of potential for movement in the pipeline. It's going to be very volatile the next few weeks as we wait to see what Ueda actually wants to do. We'll only find out once he faces Parliament towards the end of the month. But the current assumption seems to be that he's not really going to make a big change in policy. And I think that might be a misestimation. And I think we're probably going to see dollar yen moving quite considerably this year. And we're looking, you know, for levels around 120.
Oh, you could be looking at levels of 120 by the end of this year. Currently 132 on the Japanese yen, just strengthening 0.3%. The dysfunction in the Japanese JGB markets, that is a conundrum for the next Bank of Governor chief as well, Mr. Ueda. How is he going to unwind that?
I have no idea. The problem is this. I mean, there are two ways of doing this. One is what they have been doing, which is to widen the band, the trading band on the 10-year JGB, right? But we saw what happened in December. They widened the band. They thought they would take some pressure out of the system, but all that's happened is they had to buy more JGBs in the aftermath because the market will always anticipate the next move up. So that's difficult. The alternative is to a sort of SMB-style big bang, to remove the shackles from the market in one fell swoop, but that's obviously hugely risky because it would trigger a massive rise in yields and with, of course, you know, massive damage to the books of Japanese institutional investors. So it's going to have to be somewhere in the middle of that. But to be perfectly honest, it's very difficult to come up with a solution that would work without triggering some sort of pain in Japan.
All right, Sonia, thank you so much. Sonia Martin there, DZ Bank's chief FX strategist. Now coming up, Kazuo Ueda gets the nod to lead the Bank of Japan. What does it mean for policy at the central bank? We'll discuss that next. More in depth. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
Welcome back to the Open. We are 30 minutes into your European trading day 13, not 30, 13. You're seeing gains, modest gains across the European benchmark, 0.3% as we gear up for this CPI print out of the US. The importance of that in terms of what it tells us about the likely next steps from the Federal Reserve. Here in the UK, the FTSE 100 up 0.5%, futures range bound in the US.
Now, the Japanese government has formally nominated Kazuo Ueda to take the helm at the BOJ. The university professor and former Bank of Japan board member will take over from the current governor, Hirohiko Kuroda, when his term expires in April. Now, we're now joined by Takahiro Sekido, a chief Japan strategist at MUFG Bank and former BOJ official. Takahiro, as always, thank you so much for coming on. Are the markets expecting too quick a shift when it comes to Bank of Japan?
Yeah, that was surprising to us, and we expected that was go smooth. However, the nomination in reality, that was surprising, and concerns are rising so many because of firstly the uniqueness of the Kishida administration's new style of capitalism, and secondly the speculations about the LDP ruling party, the faction, and thirdly the successor to handle the Governor Kuroda's monetary easing. That was so burdensome. So as a result, and academic and neutral governor, deputy governor, who were the ex-BOJ and ex-FSA bureaucrats was with practical experience have been proposed. That was surprising.
Mm-hmm.
Yeah, so Takahiro, how do you expect then the unwinding of yield curve control that so many investors now think is inevitable? How do you expect that to unfold in the months, the quarters, the years ahead?
Yeah, out of the yield curve control changes unwinding over the near term, I want to closely watch out. Once Mr. Ueda, Dr. Ueda takes the helm, we expect the government and a BOJ joint statement that was jointed in 2013 that to be revised to be in line with the Kishida administration's new style of capitalism. And disputes surrounding the BOJ's nominations increase the challenges for the governor. But Ueda-san's academic background is expected not to interfere with LDP politics, and I believe that he will keep the BOJ's autonomy and help with the monetary policy normalization process. And the BOJ's overshooting style, the commitment and yield curve control operations will fade depending on any changes to the degree of the BOJ and the government joint statements.
So, Takahiro, you know, of course, and you know intimately the Bank of Japan. We know that the Governor Ueda will probably be different to Governor Kuroda. What do markets misunderstand about him at the moment through your personal experience and exchanges with him?
Yeah, market expected the more hawkish the stance by the Dr. Ueda, but in reality, he's not so hawkish. He's so practical, based on his academic background and also the BOJ monetary policy board members' experience. So I'm also optimistic of his road to the governor, the nomination process, but he will try to make the yield curve control more practical and to change it, to unwind it, and practically. He's not. Of course, he has a strong academic background. In reality, he can conduct it well practically, I believe.
And what tools will he reach for? If this is a gradual, this is a practical process, and he widens the band then on yield curve control, the risk, of course, is that the market then front loads, or at least gets ahead of the expectation, starts betting that the yield curve control, that band is going to be widened once again. And that is a cycle that can be caught up in terms of the next BOJ governor. How did you address that?
Yeah, that's quite the challenging process, but that is a quite challenging process. But firstly, the BOJ will remove the range, but simultaneously the BOJ will try to control the yield curve shape and to reduce the volatility of the JGB's rates and try to use the JGB fixed rate buying operations, and also pooled collateral fund supplying operations. And smartly, I believe the BOJ practitioners, central bankers, will try to control the yield curve shape first. And by case, the BOJ can increase the monetary base, but finally, BOJ will remove all of the restrictions of the yield curve control operations. And finally, we will return to the traditional JGB buying the ring-bound style operation.
Okay, Takahiro Sakido, Chief Japan Strategist at MUFG Bank, and importantly, of course, with that experience at the BOJ himself. Thank you so much for that analysis, that context. We appreciate it. Now let's get the Bloomberg Business Flash with Alice Atkins here in London. Alice.
Hi, Tom. Bloomberg has learned Qatari investors are set to make an offer for Manchester United in the coming days. Sources say the Middle Eastern country's sovereign wealth fund is helping the consortium with preparations for a bid. The future of the English Premier League club has been the subject of speculation since its American owners were reported to be open to selling a stake. Swedish battery maker Northvolt says President Biden's green tax credits are impossible to ignore. The supplier of batteries to Volkswagen and BMW says the tax credits included in the US Inflation Act could cover about 30% of the operating costs of a new plant.
If we would start tomorrow building a factory the size of Northvolt up in Skellefteå, fully built out in North America, to be ready by 2026. Between 2026 and 2030, we would be looking at somewhere between $7 to $8 billion in these credits.
Bloomberg has learned that a former Credit Suisse employee copied and took personal data from other staff members, including details of their compensation and bank account information. The company warned of the breach, which took place some years ago, in a letter to employees. The staff member had legitimate access to the data at the time and transferred it onto a personal device in breach of Credit Suisse policies. Ford says it's investing $3.5 billion in an EV battery plant in southwest Michigan. It will operate with technology and support from China's CATL, a battery maker that has stirred political controversy. Ford says the factory is set to open in 2026 and produce enough batteries to power 400,000 EVs a year. That's your Bloomberg Business Flash. Tom, Francine?
Thank you so much, Alex Atkins, here in London. Now, we go through your top stories. We talk about Bank of Japan. We, of course, talk about CPI a little bit later today. And then the Adani crisis likely to leave India's conglomerates unscathed. This is our top story today. In the last couple of minutes, we have Adani Enterprises' third quarter net income, 8.2 billion rupees versus a loss of 116 million rupees year on year. I'm not sure how much of this is huge news, but I think we're expecting from Adani to have a little bit more news on what that means for restructuring and some of the losses that they've incurred. The objective, they say, is to moderate leverage, Tom.
Yeah, the stock, at least Adani Enterprises, there are a number of listed companies, of course, as part of this conglomerate, but Adani Enterprises currently pairing some of the bigger losses of the morning in the trading session, just down 0.6%. And Adani executives saying that the volatility in the market, the current market volatility, is temporary. Right, coming up, top US and Chinese diplomats may meet face-to-face this week, seeking to diffuse tensions over a spate of mystery flying objects. We bring you the details next. This is Bloomberg.
A book about YouTube now? Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat, are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
Okay. All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the Open, 24 minutes into the European trading day. You're seeing gains of 0.3%, a little bit of upside as we lead up to this all-important US CPI print out later today. US markets, though, range-bound after gains of a little over 1% for both the S&P and the NASDAQ. And we are, of course, focused still on the yen, given the news that the new BOJ governor has been picked by the Prime Minister Kishida. Currently, yen up 132, a gain of 0.3%.
Now, Bloomberg has learned that U.S. Secretary of State Antony Blinken is considering sitting down with his Chinese counterpart, Wang Yi, in what would be their first face-to-face following the balloon drama. Blinken called off his trip to Beijing last week after Washington identified an alleged Chinese spy balloon hovering over U.S. airspace. Well, joining us now for more on all this is Asia Government and Politics reporter Rebecca Chung-Wilkins. Rebecca, thank you for joining us. So what's the latest on this potential meeting? Will it go ahead?
Well, we know that both Antony Blinken and China's top diplomatic envoy, Wang Yi, are both heading to Munich for the security conference. That's from February 17th to the 19th. Now, we have the scoop from my colleagues in the US that Blinken may be sitting down with Wang Yi at that security conference. And it would, of course, be the first time that the two are meeting since we've had this furore over this Chinese balloon that the US claimed as a surveillance object.
What could this mean? Where should we set our expectations then in terms of where this will move US-China relations?
That's obviously the central question here, and it's hard to be particularly, I think, optimistic about anything concrete that could be achieved. It's worth bearing in mind, though, that Beijing was working pretty hard to set a constructive backdrop to that planned meeting for Blinken to visit Beijing. That was obviously thwarted by this incident, and in the meantime, the US has sort of continued pressing its advantage, expanding export controls, and of course, we've seen that in response to this furore too, with these 6 additional entity lists. But a meeting in and of itself could be enough to mark a détente.
Rebecca Chung-Wilkins in Hong Kong, thank you. Plenty more coming up, of course. We'll get analysis ahead of that US inflation data report. Markets up 0.3% here in Europe. This is Bloomberg. DHL is sending a consistent message with its investments. The company spent 123 million euros to upgrade its logistics centre at the Cologne-Bonn airport, designing it around key strategic goals.
What I love about this building is it actually shows the big mega trends which formed our strategy 2025, which was inaugurated in 2019 when this building opened. So globalization, connecting the world. E-commerce, we have a lot of sortation facilities here for smaller e-commerce shipments. Sustainability, it's a very sustainable building with solar panels on the roof and everything. And digitalization, and well, you can obviously see that it is quite automated.
How did the team pitch this investment to you initially, and how hard was it as a sell for them? How quickly did you turn around and say, yes, this is worth the 123 million euros?
Of course, you always have to make sure that you have the right capacity for the growth in the network. And at that time, they came and said, hey, we will really see a strong growth in e-commerce volumes on top of the regular B2B growth. We need more sorting capacity. We need this building. And of course, there are always debates. Does it really have to cost 123 million euros and so on? But fortunately, they convinced us, because then with COVID and the volume surge, we urgently needed the capacity.
Could face bigger challenges next.
Fed was going to keep rate
World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make. Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Stocks trade higher as investors look ahead to the crucial U.S. CPI report. Treasury yields slip for a second day. Japanese Prime Minister Kishida nominates Kazuo Ueda to lead the BOJ, paving the way for a shift towards more hawkish policy. The yen gains, plus U.S. and China diplomats are said to be considering their first meeting following the Chinese balloon drama, which led to a new spike in tensions. Tom, what are you looking at the markets?
We're looking at pretty modest gains so far across the benchmark, gains of 0.3%. It was interesting to see towards the close yesterday a survey, a gauge of wage price or wage increase expectations out of the US dipping, and that gave some momentum to US markets that ended up a little over 1%, both for the S&P and the NASDAQ. It was a bit of a mixed picture. Asia ended up in the green, but a little bit of a mixed picture in mainland China. Here in Europe, then, gains of 0.3%. The DAX over in Germany adding 28 points, and the FTSE 100 also in positive territory. We had, talking of wages, wage data coming out for the UK. It was the highest on record since 2001, 6.7% in the last 3 quarters of the year, just really underscoring the pressure on the BOE. And it will be grist to the mills, the hawks, who will push for further hikes at the next meeting, or at least another hike at the next meeting. Across your sectors then, every single sector bar 2 in the green. This morning, telecoms leading the pack, up 1%. That's a picture across your sectors, 31 minutes into today's trading session. Fran.
Now, Tom, economists are expecting a 6.2% year-on-year print for U.S. CPI data when it comes out later today, with a 0.5% increase month-on-month. Bloomberg Economics, though, thinks the reading will be hotter than that due to an increase in energy prices, slowing momentum in goods disinflation, and still robust gains in services prices. Well, joining us now is co-head of global asset allocation at UBS Global Wealth Management, Mark Anderson. Mark, we're a couple of hours away, 5 hours away from that important U.S. CPI print. How are you positioning yourself ahead of that?
First of all, it's obviously the most exciting print of the month, and we're looking for markets to see core CPI coming in at 0.4%, so close to expectations, with the year-over-year number down around the 5.5%. So I think it moves us in the right direction relative to where we were about a year ago, but it's still in uncomfortable territory for the Fed. So in terms of positioning, we are positioned away from growth-oriented stocks that are still interest rate sensitive. So we think that the risk is that we're not going to see yet the numbers either on wage growth or core inflation to let the Fed pause after the next meeting, essentially meaning that the risk remains on the upside. So we're tilted away from technology shares, U.S. equities, and much more towards emerging markets, China, and the European consumer-oriented stocks at this moment.
So, Mark, what would you get you back to growth? What would take you back to technology? What would you need to see?
So inflation is obviously the most important focus here. So we need to see that core inflation gets down toward levels that the Fed is happy and comfortable with. So monthly prints at around 0.2, 0.3. We know that Powell has indicated that he wants to see wage growth coming from this current around 5% level down towards kind of at least a 3.5% level, more consistent with this kind of 2% inflation mandate. So that would be one thing. Another thing is certainly valuation. When we have technology in the US trading at around 22 times earnings, that is still a bit too expensive in our world, where we're seeing kind of earnings overall dropping in the US. We have at least IT spending coming down from a lot of large corporates, which means that we have a bit of a difficult earnings seasons ahead of us for US IT as well. So, and then if we compare this kind of 22 times earnings that we're paying for technology in the US with something like an automobile sector in Europe that is trading at 6 to 7 times earnings, and other consumer stocks very cheaply, that's a comparison that we think tilts towards these European consumer stocks.
But Mark, when do you start? I mean, if the end of distressingly high inflation is coming into view, when do you cry victory over it? Like, what kind of trend, what kind of data point, apart from the CPI, are you looking at?
I think ultimately the Fed obviously wants to see that we have wage growth coming down, where they would have this core service ex shelter, which is what a lot of us are focusing on, are coming down to these more sustainable levels. So that would certainly be the first thing that we want to see. And the interesting thing is when we had our analysis in the fourth quarter of last year, it was difficult for us to see this kind of very narrow, very unlikely soft landing path. But actually, I think there could be a route to it. So that we do have an upside case where essentially we see wage data like yesterday starting to move a bit in the right direction. We had the ECI, the employment cost index, also coming down very recently from their peaks. And if we were to see this wage data coming down, US growth being as strong as they've been indicated from payrolls, ISM services recently, we could certainly get a bit back into this kind of Goldilocks mode, which is what the markets were trading off. And that's the kind of environment where tech and US stocks are doing well.
Okay, so that's the if and the when. Right now, I know you talked about preference maybe for what's happening in China, a little bit in Europe. What else are you doing? What else are you positioned in? Where are you finding hedges?
So first of all, if we play out the stories, we're basically saying we think that China reopening is a significant driver of markets, as is some of these falls we've seen in gas prices, among others. So that leans us in towards emerging market equities and emerging market debt. We also like Australian dollar, which is something that is very well exposed to this increasing demand that we are likely to see in some of the industrial metals, and we think that the Australian dollar is undervalued. In terms of hedges, we would be looking for some of the potential safe haven currencies. So we do think that something like the yen, we've been talking about the new governor Ueda coming on. We think that eventually he will end yield curve control, and we could see dollar yen at 120. So that's a type of safe haven currency. We have some structure in place on the S&P 500 as well for our clients here.
And Mark, what looks to be in a, I don't know whether it's corporate bonds, but is there something that looks to be in a bubble that could burst quite soon?
So if we look at some of the lower rated credit, I'd certainly say that within US high yield is one example, when you have credit spreads trading at around 4.5%, with defaults likely picking up to a year where we will see lower US growth, we're seeing tightening lending standards, etc. We do think that corporate spreads in high yield is tight. So there we don't see value. But if you go to investment grade or even emerging market debt, where we're having a total yield close to 8% in US dollars with an average rating of around investment grade for some of these issuers in sovereign space in US dollars, that is something that we find has a lot more value than, say, the lower rated credit segments at this point in time.
Mark, you touched on the squeeze on earnings. You think there's more downside in terms of those earnings revisions. What is the lag effect then from the rate hike cycle to the earnings picture?
So we're certainly seeing, well, there's a couple of interesting dimensions here, because first of all, we have seen that the rate hike cycle certainly has had a negative impact on growth, and therefore also earnings growth from a demand perspective, but equally also just from an input cost and borrowing cost perspective. So we're certainly seeing that playing into 23, and our estimates is for earnings to come down roughly mid-single digits for 2023 in the US. But eventually, we're obviously going to see the market start to price off more of the bottom of these kind of earnings estimates coming through. And we do think that the fact that we've seen financial condition indices, they have actually peaked back in October, and Powell and the rest of the Fed is not really playing too much against it. So it means that we could actually start to see a bit of a bottom and an inflection point around mid of the year where we'd see some of the trough in both lead indicators and earnings estimates or earnings revisions.
Okay, Mark, really, really great context. Thank you. Mark Anderson, co-head of global asset allocation at UBS Global Wealth Management. Likes Aussie dollar, sees yen at 120. Opportunities in China and EM. Right, let's find out what stocks are on the move now with Joe Easton from our equities team. Joe, what are you looking at?
That's right, so we're starting off with this exciting news out of Vodafone today. They've sold around a 5% stake to Liberty Global, the US firm that they already have previous relationships with, including a joint venture. Liberty Global cautioning that they do not expect to take over the company in its entirety, but nonetheless, that stock jumping around 3%. Pretty big move, given it's one of the more stable FTSE 100 stocks that we have here in London. Then I'm moving over to Michelin over in France. A bit of concern around their cost outlook. They do expect around 1.2 billion euros of additional costs over the next year. That's down slightly from the record highs we saw a year ago, but nonetheless, that stock down around 1%. Also weighing on some peers, including Continental, given there's also concern around a potential slowdown of new car sales and also people changing their car tyres as the recession takes hold. The final one I'm looking at is TUI here in London, the travel firm. They've got some really positive commentary out on the last 4 weeks of trading, saying that people have used January to book ahead, book for some summer trips coming in. Although there is a little bit of caution overall, they're cautioning that they have only sold around 30% of their summer bookings so far. But I think the recent trading comments pushing that stock higher today, trimming those gains down to around 1.5%, still trading massively below its pre-pandemic levels, but nonetheless, that one going higher in both Germany and London.
Joe, what do you mean? There's no like chocolate, Lindt, Valentine's Day peg of an equity story that you're watching?
I know, I was hoping for a Valentine's Day massacre, you know, a 30% stock drop, but I just couldn't find one.
I'm sure if you dig deeper, we'll find something for the next hour. Our equities reporter there, Joe Easton. Coming up, sparks fly in the electric car trade debates. Tom had a great interview with the Northvolt Chief Executive Officer, Peter Carlson.
Yeah, really interesting. Former Tesla executive. This is a company that is backed by Goldman Sachs and VW, but really the conundrum for them is how far and how fast do they move into the US market given the subsidies and tax cuts? We're going to hear on that interview as well coming up. Your markets here in Europe currently gaining 0.3%. This is Bloomberg.
Typically, between the time you start and they get out in the farmers' fields, is about 8 years. Now we have a pipeline of innovations. We've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
Chairman of the Federal Reserve is obviously an important job. What do you do to relieve the stress other than interviews like this?
As you know, I like to ride my bike.
I say, is that safe, riding a bike?
It's safe if you stay on the bike.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Wall Street prepares for the latest read on inflation.
There's a huge amount of uncertainty out there.
We're going to get some lumpy numbers. Will annual rates continue to fall?
If we get a hotter print, how much does that really take some of the momentum out?
Instant reaction on Bloomberg Surveillance.
The data have come in stronger than expected.
Or are they literally making it up as they go?
Plus an exclusive interview with Richmond Fed President Thomas Barkin.
It just makes sense to steer more deliberately.
February 14th might have something to say about that.
Inflation in Focus, tomorrow on Bloomberg.
Welcome back to the Open, everyone. 43 minutes into the European trading day. Happy Valentine's Day. We'll see if CPI is a heartbreak or not. Stocks edging higher before that key data. Do you like that, Tom?
I love that.
I'm doing like a play of words, and I don't even get that much love from Tom McKenzie. It's all about the U.S. inflation reading. We do then have a little bit of news with the Bank of Japan, so look at yen, but overall, markets edging higher, of course, before that key U.S. data.
Okay, somehow got to transition from heartbreaker Francine Lacroix to what is happening in the electric vehicle space. All right, Sweden's Northvolt is considering postponing its planned factory in northern Germany and turning to North America instead. The battery maker is debating moving investments to the US if Europe does not bolster subsidies in response to President Biden's Inflation Reduction Act. I spoke exclusively to the Northvolt CEO, Peter Carlson, about the potential benefits of producing in the US.
We've done a calculation that if we would, if we would start tomorrow building a factory the size of Northvolt 1 up in Skellefteå, fully built out in North America, to be ready by 2026, between 2026 and 2030, we would be looking at somewhere between $7 to $8 billion in these credits, and of course that's very large amount of funds.
Is this the US? Is this setting the US up to be an EV superpower?
I think it is clearly driving the investments now in a very rapid pace. We're seeing both that on the customer side, there is a strong momentum change where the expectation either on the demand side, whether it's on trucks or buses or on vehicles, is moving very, very rapidly upwards in North America. That is it's because of this. And then you're seeing the supply chains. You're seeing the cell makers, but you're also seeing the components of electrode, of separators, of all the different parts is also moving their efforts into North America. And unfortunately, there is a risk that these investments are a little bit, taking the momentum out of Europe, which is a little bit of a concern of us.
And are you getting any sense that the US is taking steps to make the Inflation Reduction Act slightly more friendly to European countries to address some of those concerns?
I don't have the latest on this. I mean, what we have seen is kind of an attitude that this is about regaining that, just as you said, that technology supremacy to take a lead, and it's more about a technology race against China than it is a race between US and Europe, and I think Europe is a bit stuck in between here.
Okay, that was the Northvolt CEO, Peter Carlson, speaking exclusively to me yesterday. What's really interesting, friend, this is a company set up by two former Tesla executives. It's backed by Goldman Sachs, Volkswagen. They supply VW and BMW with electric vehicle batteries. But now really it's become a litmus test of what Europe can do, Europe's response to that really significant, as he described it, massive impact of the Inflation Reduction Act in the US, $375 billion worth of tax credits and subsidies. And this company is at the pinch point of that when it comes to the response from Brussels.
Yeah, and it's amazing how some of them, of course, want to look in Europe, or other ones are just saying, actually, I just want to get bigger and have more factories in the US to take advantage of the Inflation Reduction.
Yeah, and he's the first person, I think, the first corporate executive who's really put a number on this. So $7 to $8 billion worth of tax credits that he thinks their benefit could be, Northvolt, if they were to build out a factory in the US. The Germans are courting them, trying to get them to commit to their factory in Germany. We'll see if that's going to work.
Yeah, great interview, our Tom McKenzie. Let's get straight to our Bloomberg First Word News with Alice Atkins. Hi, Alice.
Hi, Francine. Ford is to cut about 3,800 jobs across Europe in the latest sign of industrial disruption caused by the sector's shift to electric vehicles. The US car giant says about 2,300 positions will go to Germany and about 1,300 in the UK over the next 3 years. The company plans to go all electric in Europe by 2035. New Zealand has declared a national state of emergency as Cyclone Gabriel brings flooding, landslips and power outages. Tens of thousands are without electricity, with many roads closed in northern regions. Auckland Airport says 45,000 travellers have been disrupted due to flight cancellations. President Biden is said to be poised to name Federal Reserve Vice Chair Lael Brainard as his top economic advisor. Brainard would replace outgoing National Economic Council Director Brian Deese. The appointment would see her work alongside another high-profile former Fed official, Treasury Secretary Janet Yellen, as key players in the administration's economic policy. Global News, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Alice Atkins, and this is Bloomberg. Tom, Francine.
Alice, thank you. Right, coming up, we're going to bring you our conversation with the UAE's energy minister. His thoughts on oil supplies, Europe's energy crisis, and recession risk. Stay with us for that interview. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open, everyone. We are 52 minutes into the European trading day. Look out for the Bank of Japan. Look out for US CPI, and stocks are gaining ahead of that. 0.3% higher for European stock 600.
Okay, Brent down 0.5%, $86 a barrel. That on a US plan to sell more crude from its reserves, offsetting again from Russian output cuts and rising Chinese demand. Our fellow anchor, Manas Krani, spoke to UAE Minister for Energy and Infrastructure, Suhail Al-Mazraoui, at the World Government Summit in Dubai. He responded to concerns that China's reopening will throw the global oil market out of balance.
The decision that we took, the 2 million cut, has been effective in balancing the market and ensuring that there is enough supply. Now, you need also to be mindful. You need also to be mindful of the slowdown in the economy, of the fact that we're not getting the pace back to where we used to be before the pandemic in terms of economic growth across the globe.
So that's the global perspective, and here's what I want to get a sense from you. Many people have said to me, slow, low recession, soft landing. Is that now your base case scenario? Do you think the risk of a severe downside in the global economy is gone?
I think that's what we have been hearing from the experts, the IMF, the others. This year is going to be rather not an easy year, but they are not expecting to go back to normal. They're not expecting a rebound, and I think that's we take. And until something significant happen that changes that, we will have to take that as a base case.
What could be significant?
I mean, significance in terms of the demand rebound, and we haven't seen that. Actually, we have seen some growth in the inventories, which means that there is enough volumes in the market, and the price also is a testimony of the balance.
The other narrative is that there will be a deficit in the second half of the year. Given the inventory build, are you confident no deficit second half of 2023?
Well, I cannot say for sure, but the signs are that we are seeing they are balancing each other. There is growth in certain parts of the world compared to the lockdown in China, but there is also a slowdown in certain other parts of the world in certain of demand. Something I want to mention, there is also a reduction in the demand in Europe, for example, in energy in general, because of the higher gas prices. People are becoming more conservative in their consumption, and I think that's a positive thing. That's something that is positive, and that is.
So it's a material slowdown in demand in Europe?
I think rather conservation in the energy use.
Now, overnight.
Well, that was Bloomberg's Manas Krani speaking to the UAE Energy Minister, Suhail Al-Mazraoui. We'll have plenty more, of course, on oil throughout the day, Tom.
Yeah, just checking your markers before we let you go. Gains of 0.4%, a little bit more conviction now. Futures in the US flat. Stay with us. This is Bloomberg.
everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Inflation position in European stocks mostly tracked Wall Street higher before today's crucial U.S. CPI report. Japanese Prime Minister Fumio Kishida nominates Kazuo Ueda to lead the BOJ, paving the way for a shift towards more hawkish policy, the yen gains. And shares in Norsk Hydro, one of the world's biggest aluminium producers, are lower after the company missed estimates in the fourth quarter. We'll hear from the company's chief financial officer later this hour. Now, first thing is first, and it is a big day for markets, not only US CPI, but of course everything that's happening at the BOJ. So let's kick off and looking at the markets. Stocks pretty much edging higher. This is all ahead of that US inflation reading. If you look at the yen, and this is the BOJ, of course, announcement, the yen strengthening against most G10 currencies after the government made the BOJ announcement. It's very clear when you look at charts and maps that traders have recently increased bets that the BOJ's yield curve control and negative rate policies may be abolished soon under Ueda's leadership. We actually spoke to someone from formerly Bank of Japan that knows Mr. Ueda intimately, and he says, look, it may not come as soon as markets are pricing in. The European map, let's see if there's a huge difference between some of the sectors on the move and certainly some of the countries on the move. It doesn't feel like it is, although we do have some really interesting signs here in the UK. UK wages rising more than expected, in the added sign of inflation. And then we also have a Bloomberg survey. We'll get our economists actually on this a little bit later on, saying that a lot of workers, certainly in London, want a 16% increase to come back to the office instead of working from home. Now, economists are expecting a 6.2% year-on-year print for US CPI data when it comes out later today, with a 0.5% increase month-on-month. Bloomberg Economics, though, thinks that reading will be hotter than that due to an increase in energy prices, slowing momentums in good disinflation, and still robust gains in service prices. We're now joined by Alex Brazier. He's deputy head of BlackRock Investment Institute for many years, also at the Bank of England. So you know and understand inflation and the obsession with inflation quite intimately. What are you expecting from CPI? And good morning.
Well, that consensus view that you described seems reasonable, but there's a lot of uncertainty in this environment, not just about the month-on-month change, but about where inflation's tracking over the year as a whole. You listed some of the forces at play there. We've got energy prices stabilizing, we've got goods disinflation, but most importantly, and the thing that's going to control where inflation ends up settling, is that core services inflation, which is really driven by wage growth. We've got very persistent wage growth. in the US economy, as we saw this morning in the UK economy. And that's ultimately going to mean, in our view, that inflation's a little more sticky than perhaps markets have been pricing in. But there's a range of possible outcomes here.
So, Alex, how do you see it? That it's coming down, so we don't have that red-hot inflation anymore, but then how sticky is it to get it down? Does it actually warrant many Fed hikes?
Yeah, I think possibly the Fed will need to keep rates higher for longer, and you see the rates market beginning to price that over recent weeks. The interesting thing is, inflation's coming down driven by goods disinflation and energy prices. Getting down to 4% seems a done deal. It's the interesting thing is, can it go below that without the Fed crushing demand in some way? Now, it's possible, and the market has begun to place a lot more weight on that over the course of the year. But it's very possible it doesn't. With a very tight labor market due to labor supply constraints, that wage inflation is really the thing to watch rather than the month-on-month CPI prints.
And Alex, and actually, we have some really great charts. We have core services versus core goods year on year. We have the wage growth, which we'll get to that in a second. Overall, how much of this slowdown that we've seen so far from that red-hot inflation is due to monetary policy readjustment?
Very little, actually. Okay. I see two forces happening so far. One, of course, is the stabilization of energy prices. Yep. The other, though, is the disinflation in goods. So during the pandemic, we saw this huge surge in goods prices as we all stopped spending on services and started spending on goods instead, and that's what caused all the bottlenecks and supply constraints. That surge in goods prices relative to all other prices is now unwinding. Now, the process is pretty bumpy, so there's a lot of uncertainty about where we go month to month. That's going to drag down on inflation this year, but that is, to use an old school phrase, a transitory effect. And what happens after that will be dictated by where services inflation is, and that depends on where wage growth settles.
But have we lost control of wage growth? So it's not, there always is a bit of a mismatch. If there's a wage spiral to the upside and people want and think they're owned, then you kind of lose control.
Yeah, it doesn't look like the US or other economies are actually in a so-called wage price spiral right now. Wage growth is pretty strong. It reflects a tight labor market. You look at the US, an unemployment rate of 3.6% has always, in the post-war period, been associated with strong wage growth, even adjusting for where inflation is. So this isn't in many ways a surprise. The big question is, does wage growth ease as inflation comes down of its own accord? And that's possible.
Yeah.
But it's more likely that wage growth is pretty stubborn amidst this tight labor market. And as a result, the Fed needs to keep rates higher for longer to squeeze that labor market pressure out and get inflation all the way down.
Where do you think, Alex, we end up with in terms of the terminal rate for the Fed?
Well, the terminal rate of around 5.25, which is where the market has been on a round trip, but it's got back there, seems pretty plausible. I think there is a risk on the upside to that, though, which is if the economy doesn't slow and proves pretty resilient to that level of rates, which is what the equity market got quite excited about,
so far, right?
and has been the case so far, actually tells you the Fed needs to do more in order to generate the kind of slowdown that it may need to see to get inflation all the way down. And so this is what I mean by considering the full range of scenarios for the year. This is an environment with no playbook. And so investing in this environment requires considering all the possible scenarios we're faced with.
But the possible scenarios are what, 4 terminal rate up to 5, or are we? I mean, how much do you think we're misjudging this?
If 5.25 is the central view, right, there are risks on both sides of that. One is on the upside, where it turns out the economy is more resilient to these rate hikes, but the Fed still needs to crush activity to get inflation all the way down.
6%?
In which case you need to go even further.
Okay.
That's not my central case, but I think that is one of the scenarios that has to be on the table. The other is that the Fed goes a little further, and that does slow the US economy, but inflation does come down largely of its own accord. That's a possibility as well. And this is a really uncertain environment. And that's why you need to consider all those different outcomes.
Yeah. Alex, the other big story is, of course, Joe Biden poised to name Lael Brainard as his top economic advisor. I mean, that means there's a vacuum at the Fed. Like, how does that shift the dynamics?
Well, one of the there's many central bank appointments today as well. We're going to come on to those. These central bank appointments get a lot of headlines, or in this case, a central bank unappointment. But actually, it's the economic circumstances that dictate where central banks end up going. They are controlled by the forces around them. And in the Fed's case, the thing they're focused on is this thing we're discussing, which is wage growth going to be persistent amidst a tight labor market, or will it ease of its own accord? And the signs are in the labor market this tight that we could see much more persistent wage growth.
Alex, and we are speaking about the BOJ shortly, but there seems to be market movements that almost, are trying to force central banks' hands. And this could be Fed, but it's certainly the Bank of Japan. Are we underestimating? Like, is your money on what the markets are thinking overall, because central banks actually don't want to disappoint, certainly not like they did maybe a couple of years ago?
I'm not sure about that. I think in this case, the central banks are focused on getting inflation down. Yeah. The big uncertainty, though, including for them, is how much they need to do that. Now, in our view, they will need a slowdown. The tightening they've put in train will generate that slowdown and a recession. And as a result, they will get inflation further towards their targets. But it won't be a kind of pleasant, immaculate process.
But the market's not seeing that.
Yeah, and over the course of the year so far, the market's been placing increasing weight on inflation coming down of its own accord, the economy being pretty resilient to rate hikes. And that's possible. But a lot has to go right in order for that to happen. And these other outcomes of, well, if the economy does prove resilient and the Fed has to go further and raise rates higher, have to be on the table, as does the possibility that inflation doesn't come down of its own accord and the Fed has to keep rates north of 5% for quite some time.
Do you think there's an optimistic bias in markets in general because of the last 10 years and what we lived through?
I don't know about an optimistic bias in general, but certainly in January, we saw increasing weight being placed on this good outcome of inflation coming all the way down of its own accord, growth being sustained despite these rate hikes. It's possible, but the risks to that outcome are certainly in one direction.
All right, Alex, thank you so much. Alex Brazier, Deputy Head of the BlackRock Investment Institute, stays with us because we talk Bank of Japan and Bank of England next. Coming up, Kazuo Ueda has been nominated by the Japanese government to lead the BOJ, so we'll discuss what that means for the yen and the end of the yield curve control. That's coming up next, and this is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
He may change his policy if the Japanese economy gets overheated, which is expected at this moment. He might, be in a position to tighten the monetary policy rather than continuing to ease the monetary policy.
Well, Japan's former vice finance minister, known as Mr. Yen, on possible changes in BOJ policy. Now, staying with Japan in the news that Kazuo Ueda will lead the Bank of Japan. Bloomberg Intelligence thinks he would bring a slightly more hawkish tilt to the central bank, but not an abrupt exit from yield curve control. Well, Alex Brazier, deputy head of BlackRock Investment Institute, many years at the Bank of England, joins us again. Thank you for sticking around, Alex. When you look at, first of all, the policies, right, of someone who talks as a non-insider, how much do they change? Like, we know a little bit of what Mr. Ueda is thinking at the moment. I mean, could he, pivot significantly when he's in charge?
Yes, I think so. Although it's less about the personality, as we said before the break, and more about the fundamentals that this new governor finds himself in. Japan, for many years in deflation, following an inflation surge, that picture's now changing. Now, you have to be a little bit cautious because a lot of that inflation surge was driven by energy price pass-through and very strong import price inflation following the yen depreciation. So it was transitory. But actually, the important thing for the Bank of Japan now is that it's becoming more embedded in wage growth. We've seen that pick up in wage growth, which changes the picture pretty decisively, in our view. It means that the Bank of Japan has achieved its stated aim. Wage growth isn't a problem in Japan, it's part of what they're trying to achieve. And so that yield curve control policy can, over time, be loosened and abandoned.
Over time is probably the key word. Are the markets thinking that it comes quicker than you think it does?
It's very difficult to get the precise timing, but what you do know is that when it happens, it could be disorderly. In the same way that changing a currency peg is always disorderly. The swaps market is anticipating this change, but when, and I don't think it's a case of if, I think it's a case of when the Bank of Japan changes its yield curve control policy, and it may do so in a sequence of steps. We could see the long end move up very sharply, and we could well see that spill over to developed market long duration bonds as well. And that's one of the things that keeps us a little bit cautious on long duration bonds.
So if you look at maybe less than timing, but the fact that they could do it in steps, would that make it less disorderly?
Not necessarily, because take, for example, the idea that has been floated that they move from controlling the 10-year point to controlling the 5-year point of the yield curve. That's a step towards abandoning yield curve control. You still see the 10-year move very sharply at that point. You look at where swap rates are now to give you an indication of that. So when you abandon these things, the move is by definition sudden, and that runs then the risk of creating spillover effects.
So how do you play it at the moment? Is there a way to play it, cautiously?
Well, I think for us it means a couple of things. The first is that we underweight Japanese long-term government bonds. We are also bringing Japanese equities into line with our view on developed market equities more generally. We don't see a reason to favor Japanese equities in this sort of environment where the policy could be released. And as I say, it's one of the factors keeping us a little bit cautious about longer duration government bonds more generally in developed markets.
Alex, we also spoke, quite intensively about, of course, the Bank of England. We had a couple, actually one MPC member, I think yesterday, saying, Brexit has cost £1,000 per household. Like, how do you view the Bank of England dynamics where we are? People are much more upfront about what they think the Brexit impact is. Does it make a difference on how they set policy?
I'm not sure it does, actually. And it's very difficult to disentangle the effect of Brexit, the energy shock, and the pandemic, all of which are very big supply shocks in their own right. So I don't know how you attempt to disentangle those things. But what is clear is that the UK is a kind of microcosm of developed markets in general at the minute. Inflation's coming down as energy prices stabilize and goods disinflation takes hold. Wage growth, though, is still very strong, and services inflation is very strong. That reflects a tight labour market due to reduced labour supply. It's exactly like the other economies. The UK probably, therefore, needs a recession to get it down, probably a deeper one than others because of weak productivity growth, and that's what the Bank of England thinks it's going to achieve. You look at its forecasts, and they don't include a deep recession, but very strikingly, they pencil in no growth over the period from the beginning of last year to the beginning of 2026. And that overall is a very big recessionary period.
But is the labour market much tighter here than in other parts of the world?
No, I think it's as tight, but not necessarily much tighter. The UK, like the US, has experienced a big labour supply shock, partly due to demographics and partly because the pandemic accelerated the retirement of a whole cohort of people. So even though employment isn't high by historic standards, the labour market is tight. You've got low unemployment, you've got high vacancy rates, all of which is adding to wage pressure and making it difficult for the central bank.
Alex, thank you so much for joining us today with, of course, a lot of insight on US CPI, on the Bank of Japan and the UK. Alex Brazier, Deputy Head of the BlackRock Investment Institute. Now, coming up, nearly 3/4 of London workers would rather quit their jobs and return to the office full-time. We'll bring you more from our research next, and this is Bloomberg.
Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat, are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's our daily UK segment. Now, nearly 3/4 of London workers, I love this story, nearly 3/4 of London workers would rather quit their jobs than giving up the flexibility to work from home. Now, a survey by Bloomberg Intelligence found 4 in 10 would need a raise of at least 16% to reconsider their position. Now, here with me, Sue Munden from our Bloomberg Intelligence team. Sue, I have to say, no one could pay me enough to actually stay at home. I love being in the office, but what's the rationale, first of all, behind the survey?
Well, we wanted to get the employees' perspective on this. Obviously, work from home is a big issue. I do real estate, and all the big London REITs who tend to have the big multinationals as their tenants in prime space tell us what they think. But I thought it would be really important to get a much broader perspective by having a survey. And we surveyed 500 respondents about a week ago and asked them these questions. So what would it take for you to go back to the office full time? And so on. And so we've learned quite a lot from the survey. We can go through some of the results if you like.
Yeah, I mean, the results are pretty amazing, actually. And it kind of points to the fact that people, want 16%, which is not insignificant in terms of rate rise. But does it mean that work from home is here to stay?
I think it really is. 95% of the respondents said that their offices already give them work from home. 70% of the respondents said that they think it's here to stay, that they actually believe that it's a permanent fixture. So yes, I do believe it is. And also, out of that 73%, what we've seen is previously, the elder generation only in June, because we did another survey in June, they'd said that about 44% of them wanted to have permanent work from home or those flexibility. Now that's gone up to 77. So that 73% now is a very, very small variance between the age groups.
And so do you think it's London, because it's London, so it's also more expensive, the commute is more difficult, or is it just a lifestyle?
Yeah, so there's a chart that we had that showed the reasons why people wanted to come back to work and why they didn't, why they want to stay at home. Obviously, rail strikes, costs and all that sort of thing. Coming to the office, salary increase was high up there, but also things like networking and the knowledge transfer for the younger staff and so on.
So we got UK jobs data today, and
We did,
that's
yes.
quite a big one. Any implications that you saw in the survey for that?
Well, I think the sort of confidence that the respondents had may come from the fact that it's a really tight labour market. And being a tight labour market, they have the bargaining power. So they're sort of perhaps pushing their price up a bit. So, you know, pricing the return to the office at that level is quite big. So, yeah.
Yeah, and frankly, if you have good employees, like they should be flexible if you want to retain them. I mean, you can give them what they want. It's not, you know, it's not rocket science, right?
Yeah, retaining talent in the UK is quite hard, especially in London.
Probably the biggest job.
And also, actually, the cost of the office is quite a small proportion of the total cost for anyone who's renting an office. And the labour cost is the big thing. So you can actually see that for smaller businesses, they probably prefer to tell their employees, go work from home and we'll top up your salary, which talks to today's data as well.
I mean, I wonder whether if you move from London, do you get and I know a couple of chief executives were talking about this, if you move from London, do you then get a, decrease in salary because it's cheaper to live elsewhere? It's tricky.
It's always usually been the other way around. You just get paid more when you come to London. So whether they're going to be able to reduce people's salaries is quite a difficult thing to do.
Yeah, again, I'm not head of HR, but you're right. If you want to keep your talent, usually do not offer them less money if they want to work from home. Sue, thank you so much.
Thank you very
Sue
much.
Munden there for our Bloomberg intelligence team. Now, we'll be covering all things UK every week on Thursdays at 9:30 a.m. in our half-an-hour special. So we'll have great reports. Of course, our team of UK anchors and reporters will be joining us to make sure that we cover all of the top stories. This is a picture overall for European stocks. So they're edging higher before that key U.S. inflation data. Overall, they were they were actually a little changed this morning. The other piece of news is that we saw a drop in wage growth expectations easing in the U.S., the yen rising following the formal nomination of Kazuo Ueda as the next Bank of Japan governor. Coming up, shares in Norsk Hydro slump on the back of an earnings miss. We speak to the CFO next. This is Bloomberg.
Seeds, typically between the time you start and they get out in the farmer's fields, is about 8 years. Now we have a pipeline of innovations. We've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
The moment news breaks, no one covers the world like Bloomberg.
The return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt, with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
Inflation positioning European stocks mostly tracked Wall Street higher before today's crucial U.S. CPI report. Japanese Prime Minister Fumio Kishida nominates Kazuo Ueda to lead the BOJ, paving the way for a shift towards more hawkish policy. The yen gains. And shares in Norsk Hydro, one of the world's biggest aluminium producers, slump after the company missed estimates in the fourth quarter. We'll hear from the company's chief financial officer in just a few minutes. Now, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Norsk Hydro has reported a sharp drop in aluminium demand in the fourth quarter, clouding the outlook for the Norwegian firm at the end of a record year. Quarterly sales of extruded aluminium products sank 12% from a year earlier as orders from the construction and industrial sectors fell. Well, we're now delighted to be joined by Paul Kildemo. He's the CFO of Norsk Hydro. Paul, thank you so much for joining us on Bloomberg. What do you attribute this downturn to? Monetary policy trying to slow economies, or is there something else more sinister out there?
I think the downturn is driven by a combination of elements. The inflationary pressure that we've seen from high energy prices really started the whole downturn, basically reducing the end demand. But that has now been replaced by, as you say, measures to try and curb this inflation. But I would like to say that if you look at what we see now compared to what we did only a quarter ago, demand actually looks a bit stronger for aluminium on the back of the changing situation we see in China.
But Paul Kildemo, give me a sense of exactly what China means. So, what impact are you specifically seeing from the China reopening? How much is the downward effect then transitory, and how much of it is deeper?
I think as a starting point, it's mostly sentiment driven now, and that's what's gotten up prices. The reason why the Chinese balance is a bit tighter is because they've had to curtail a certain amount of capacity also. But if you look into half-year figures, then you see more stimulus-driven demand potentially picking up the global economy through China for aluminium.
But what does it mean for European smelters that are already struggling with the cost of inflation and, of course, higher energy prices and, trying to see the economic downturn, the effect it has on them?
Yeah, so for energy smelters in Europe that don't have long-term power contracts, it still looks challenging. We haven't seen a lot of restarts apart from the state-subsidized ones since the energy prices came down. And even at the lower levels of energy prices today, with the higher aluminium price that we're seeing, it doesn't make sense to restart European curtailed capacity. And we actually still see around 600,000 tons at the risk in Europe that would potentially have to curtail if prices rise again on a cold spell or similar.
So you have more employees in the U.S. than any other Norwegian company. What's the impact of the Inflation Reduction Act on your capacity? Do you want to increase capacity in the U.S.?
Well, it looks more attractive to do adjustments to our portfolio in US versus Europe, unless Europe really gets something to match, especially on the renewable energy and renewable technology side. We are an aluminium company, but we also have a hydrogen unit, and we are looking to gradually replace gas in our cast houses and other processes with hydrogen. As it stands today, this looks much more attractive to do in the US than in Europe, and that is probably where one would start if one looks at the pure financial fundamentals.
But what's needed from the EU to make sure that production capacity of all things, of aluminium, but also hydrogen, doesn't move to the US and actually stays in Europe?
Well, I don't necessarily see that aluminium production in US is a big competitor to Europe as we see it now, based on the energy market. But I think to ensure that we maintain energy capacity or aluminium capacity in Europe, it's important that we continue to focus on creating a global playing field. Keep CO2 compensations in place until you get the CBAM fully up and running, a fully functional CBAM, which leads to the intended effects. When it comes to more new technologies, then of course Europe needs to provide something which matches what the US has come up with if they are to be able to compete to the same extent. We're seeing promising developments now in the proposals that are coming out, but they're still too generic and not specific enough to make investment decisions on the back of.
Paul, at the same time, the U.S., we understand, is planning to extend some 200% tariffs on Russian aluminium as soon as this week. Now, we understand that the President Biden has yet to give the official go-ahead on this move. But what would that mean for, European aluminium producers in general?
At the moment, there's not that much Russian aluminium that flows into the US, and the fact that US puts in place tariffs doesn't necessarily impact the broader market. I think people that were looking for a more positive price reactions, who were hoping for sanctions, that sanctions would be broader and they would be more challenging also to trade aluminium outside the US. So there's positives and negatives on this, but I think in general, the consensus is that this is quite a non-event.
I mean, I think you've been keen to expand in low-carbon aluminium. Can you tell us a little bit more about what kind of demand you're seeing for that?
Yes, this is really what the company is all about. We work throughout the value chain from bauxite and alumina to extrusion to ensure that we can deliver the lowest carbon aluminium. And when you look at general demand for aluminium, it's about 3% year over year. But if you look at low carbon aluminium at 4 tons of CO2 and below, we expect demand of 20% year over year. And if you look at our sale of greener products this year compared to last year, even with the weakening Q4, we're actually up 60 to 70%. So this is the market for aluminium where we see the biggest margin potential going forward.
Yeah. Paul, I also need to ask you about this class action suit against Norsk Hydro in the Netherlands. And this is about a smelter, or actually a refinery in Brazil, that they allege has been damaging and polluting in the surrounding community. What does this mean for Norsk Hydro?
Well, these are cases that has been going on for a very long time in Brazil, which are now moved to the Dutch court system. And we have a high focus on being a good neighbor. And we had our issues back in 2018, where we had to curtail our refinery. But at the end of the day, it was proven that there was no overflows or nothing that shouldn't have been done that was done. So we will handle this lawsuit in Netherlands as we do in Brazil going forward. To be a provider of low carbon aluminium, you need to focus on more than just climate. We need to focus on environmental and social, and we are really doing that in Brazil these days.
Yeah. Paul Kildemo, thank you so much for joining us, Norsk Hydro Chief Financial Officer. Now let's get straight to the first word news with Simone Foxman in Doha. Hi, Simone.
Hi, Francine. Bloomberg has learned that U.S. Secretary of State Antony Blinken is considering sitting down with his Chinese counterpart Wang Yi, the first meeting since the downing of a balloon over the United States. Sources say the two would meet at the Munich Security Conference later this week, if both sides agree. The U.S., meanwhile, has recovered what it calls significant debris from the remains of the balloon shot down off the coast of South Carolina last week. New Zealand has declared a national state of emergency as Cyclone Gabrielle brings flooding, landslides, and power outages. Tens of thousands are without electricity, with many roads closed in northern regions. Auckland Airport says 45,000 travelers have been disrupted due to flight cancellations. President Biden is said to be poised to name Federal Reserve Vice Chair Lael Brainard as his top economic advisor. Brainard would replace outgoing National Economic Council Director Brian Deese. The appointment would see her work alongside another high-profile former Fed official, Treasury Secretary Janet Yellen, as key players in the administration's economic policy. Bloomberg has learned that a former Credit Suisse employee copied and took personal data from other staff members, including details of their compensation and bank account information. The company warned of the breach, which took place some years ago, in a letter to employees. The staff member had legitimate access to the data at the time and transferred it onto a personal device in breach of Credit Suisse policies. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Simone Foxman, and this is Bloomberg. Francine.
Simone, thanks so much. Coming up, how will the oil market fare in 2023? We found out what the UAE energy minister thinks. That's next, and this is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority. Wall Street prepares for the latest read on inflation.
There's a huge amount of uncertainty out there.
We're going to get some lumpy numbers.
Will annual rates continue to fall?
If we get a hotter print, how much does that really take some of the momentum out?
Instant reaction on Bloomberg Surveillance.
The data have come in stronger than expected. Or are they literally making it up as they go?
Plus an exclusive interview with Richmond Fed President Thomas Barkett.
It just makes sense to steer more deliberately.
February 14th might have something to say about that.
Inflation in focus today on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, oil fell on a U.S. plan to sell more crude from its reserves, offsetting a gain from Russian output cuts and rising Chinese demand. Our Bloomberg Daybreak anchor Manus Crani spoke to the UAE Energy Minister Suhail Al-Musrei at the World Government Summit in Dubai. Now, he responded to concerns that China's reopening will throw the global oil market out of balance.
The decision that we took, the 2 million cut, has been effective in balancing the market and ensuring that there is enough supply. Now, you need also to be mindful. You need also to be mindful of the slowdown in the economy, of the fact that we're not getting the pace back to where we used to be before the pandemic in terms of economic growth across the globe.
So that's the global perspective, and here's what I want to get a sense from you. Many people have said to me, slow, low recession, soft landing. Is that now your base case scenario? Do you think the risk of a severe downside in the global economy is gone?
I think that's what we have been hearing from the experts, the IMF, the others. This year is going to be rather not an easy year, but they are not expecting to go back to normal. They're not expecting a rebound, and I think that's we take. And until something significant happen that changes that, we will have to take that as a base case.
What could be significant?
I mean, significance in terms of the demand rebound, and we haven't seen that. Actually, we have seen some growth in the inventories, which means that there is enough volumes in the market, and the price also is a testimony of the balance.
The other narrative is that there will be a deficit in the second half of the year. Given the inventory build, are you confident no deficit second half of 2023?
Well, I cannot say for sure, but the signs are that we are seeing they are balancing each other. There is growth in certain parts of the world compared to the lockdown in China, but there is also a slowdown in certain other parts of the world in certain terms of demand. Something I want to mention, there is also a reduction in the demand in Europe, for example, in energy in general. Because of the higher gas prices, people are becoming more conservative in their consumption. And I think that's a positive thing. That's something that is positive, and that is...
So it's a material slowdown in demand in Europe?
I think rather conservation in the energy use.
Now, overnight, breaking news, that's what we do. The Americans are preparing to release more oil from the SPR. Some OPEC members have in the past criticized this. Do you welcome an SPR release? Do you think it's necessary?
It's a decision of the United States. It's a sovereign decision. I'm not going to comment on that. What we will always make sure of is that the market is well balanced, and we will do our parts of the equation.
Well, that was Manus Crani speaking to the UAE Energy Minister Suhail Al-Musrei. The other story that we need to keep an eye on is TSMC. This is Taiwan Semiconductor Manufacturing, and it has just announced that it will increase investment in TSMC Arizona by up to $3.5 billion. So this is, well, not small in terms of investment. Earlier on, we did find out that revenue overall had increased 3.9% on the quarter. Now let's get straight to your Bloomberg Business Flash. Here's Simone Foxman in Doha. Hi, Simone.
Thanks, Francine. Ford is to cut about 3,800 jobs across Europe in the latest sign of industrial disruption caused by the sector's shift to electric vehicles. The U.S. car giant says about 2,300 positions will go in Germany and about 1,300 in the U.K. over the next 3 years. The company plans to go all electric in Europe by 2035. Gautam Adani's flagship firm has swung to a profit, with Adani Enterprises posting net income of 8.2 billion rupees for their latest quarter. The company reported a loss in the same period last year. This is as the Indian billionaire tries to win back investor confidence after a bruising report from a short seller wiped out more than $120 billion of his empire's market value. Bloomberg has learned Qatari investors are set to make an offer for Manchester United in the coming days. Sources say the Middle Eastern Sovereign Wealth Fund is helping with the consortium with preparations for a bid. The future of the English Premier League club has been the subject of a lot of speculation since its American owners were reported to be open to selling a stake. Global news, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Simone Foxman, and this is Bloomberg. Francine.
Yeah, we're so obsessed, Simone, with the football story. We did speak to the QA also in Davos. Now let's get straight to your stocks to watch with Joe Easton from our equities team. Joe, do you have anything Valentine's for me?
I do, Fran. I've got a Valentine's Day romance between Vodafone and Liberty Global. Liberty buying a 4.9% stake in Vodafone, the UK telecoms giant. They've been flirting for a while via some joint ventures. Get another Valentine's Day reference in there. This should spur some hope that the companies could potentially revive Vodafone's growth prospects. That stock up 3.5% in London, one of the best movers today, though Liberty warning they're not willing to go exclusive yet, won't be doing a full takeover. Then I'm moving over to Delivery Hero, of course, the rival to Just Eat and also Deliveroo. This stock is down about 4.7% today as they issue around €1 billion in convertible bonds. That'll be used for potentially some small M&A and also to weather a slowdown in orders as the economy hits that recession. Analysts saying it doesn't look good that they're not able to generate that cash through their own business. Then I'm going to quickly go over to TUI, which is the dual-listed London and German travel company. They've got some really positive commentary on their recent bookings, saying that people are getting ahead on their summer vacations, getting those booked in, and are actually above pre-pandemic levels heading into the key spring and summer selling seasons. The final one, just quickly, is actually over in Germany as well. This is ThyssenKrupp, massive steel company. They're dropping today as their costs, their input costs in terms of iron ore, still weighing on their cash flow. Their earnings are expected to be below expectations in the next quarter as some auto demand also weakens. Alongside those margin pressures, ThyssenKrupp down 8%, one of the biggest decliners in Europe today.
All right, Joe, thank you so much. Bringing the Valentine Day puns. Our equities reporter, Joe Easton. Coming up, Credit Suisse making headlines again, this time from the data breach by a former employee. So we'll have all of the details next, and this is Bloomberg.
investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bloomberg has learned that a former Credit Suisse employee copied and took personal data from other staff members, including details of their compensation and bank account information. The company warned of the breach, which took place some years ago, in a letter to employees. Well, joining us now is Bloomberg's Tom Metcalf. Tom, I don't know what, I mean, it's bad, and it's bad at any company if this happens, but it just feels so much worse for Credit Suisse because they've been in the headlines so long, right? How big a deal is this?
No, they just can't seem to catch a break. I mean, this obviously has nothing to do with their current troubles, and it's, you know, it does seem to be a case of a kind of bad apple rogue employee at the time. But yeah, no, I think it just sort of feeds into this narrative, and it's just unhelpful, right? It's the last thing they wanted, or sort of another kind of own goal. And really interesting to see, you know, right now it does seem like it's been quite contained. I think the Swiss regulator is looking at it. Obviously, anything to do with personal data. I think there's some salary data in here. It's not great, but it is historic. I think it was sort of noted in 2021, and they've had to take this long before they could kind of notify anyone else. And I think the data refers to 2013, 2015. So should put all that in context. It's not kind of sort of systemic for them right now, but it's just very unfortunate.
So what does it tell us, Tom? First of all, talk to us about the breach. So if you put the breach into context, does that happen at other banks? Is it employee data or is it actual client data?
So what we understand from the statement is basically someone who was working at the bank and had access to this kind of data was somehow allowed to take it basically outside of the Credit Suisse network. And, you know, I guess that's sort of a risk at, you know, a lot of other places. We haven't seen something like this at many banks for quite a while. But yeah, it's one of those kind of inevitable, it's probably inevitable given how much data is out these days.
Very quickly, what's next for the bank?
Well, I think the things we're looking for is, you know, I think in April they have a investor day or an AGM, sorry, and then come May, we're looking at Q1. So just whether they can kind of turn the ship around.
We'll be back in Zurich. Thank you so much, our Tom Metcalf there with the very latest on Credit Suisse. Don't forget to stay with us here on Bloomberg. Later today, 2:30 p.m. London time, we'll have an interview with the Richmond Fed President, Thomas Barking. It's going to be a very interesting conversation. Of course, we have a full roundup of that inflation figure a little bit later from the U.S. as well. This is Bloomberg.
What are the biggest challenges for General Dynamics, and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding, and the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
We are still far from achieving price stability, and I expect that it will be necessary to further tighten monetary policy to bring down inflation down toward our goal.
It's about the labor market. The Fed is very concerned that the price increases are going to be sustained unless we really see a step down in the growth of the labor market.
If policy remains restrictive for longer, that soft landing very quickly starts to look like a hard landing.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. It's official. Japan's government formally nominates Kazuo Ueda to lead the BOJ, paving the way for a shift towards more hawkish policy. The yen gains. Countdown to U.S. CPI, investors' position for today's crucial inflation report, while President Joe Biden is poised to name Lael Brainard as his top economic advisor. And automakers used to run plants at full tilt and sell cars for deep discounts. Now they're keeping inventories tight and prices high. Details on today's big take story ahead. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And Matt, you thought it was Valentine's Day. Actually, it is U.S. Inflation Day.
Yes, well, happy Valentine's Day nonetheless, Anna. We are looking for an inflation print at 6.2%. That would follow a print from the previous month at 6.5%. If we get a big beat in terms of inflation, if inflation comes in higher than anticipated, many expect it to be a very risk-off day. If it's lower than anticipated, we could be off to the races. Take a look at U.S. futures right now. We're up about 0.1% after finishing the day higher yesterday. And I think investors were encouraged by data from the New York Fed that showed wage growth and inflation expectations are being held down, or they were held down in the last month of a survey that they did, and that is what's giving investors a little bit more confidence that we could see a good print today. The U.S. 10-year yield at 369.78, so coming down from where we saw it yesterday. We were up over 370 yesterday, and the Bloomberg Dollar Index also softening a little bit right now. We're off 0.25%. You can see gains in the pound, I know, against the dollar, gains in the euro against the dollar, and we'll check the yen in just one moment. Bitcoin right now at 21,819. it is gaining, and this has become such a risk indicator that if we see stocks move higher, you're almost guaranteed to see Bitcoin move higher as well. The same is true vice versa. Take a look at what's going on in Asia and how we finished the session there overnight. The MSCI Asia Pacific, the broad index, was higher by 0.6%. I note that we saw bigger than usual gains in India. The Sensex up, closing up about 1 full percent, and the Nikkei also closing up about 2/3%, at 27,600. You can see the U.S. dollar weakening against the yen. It can buy 132 yen, though we did hear Mr. Yen in Japan say that it could be strengthening. You could see the yen strengthen to 120 if Ueda is able to raise rates, something I'm sure we'll talk about throughout the program and throughout the day. What do you see in Europe, Anna?
Yeah, absolutely. We'll have more analysis on that Japan story a little later in the program. This is the European picture then, Matt. Pretty positive as we see U.S. futures recover from earlier losses. That helps Europe secure these modest gains that we're making across European equity markets, up around 0.5% on the London market, 0.4%, 0.2% for other major markets. It's pretty broad-based. We see all sectors in Europe in the early hour of trading here, all sectors in positive territory. That seems to be a fairly broad picture of gains. The best performing sector, though, has been around the telecom space. Vodafone, the telecom operator here in the UK, up by 3.6%. Of course, it operates far and wide beyond the UK's borders. But we've seen Liberty Global taking a stake in this business. They've said they don't want to go for a full takeover, but does this pile pressure on the team at Vodafone to shore up the management ranks? TUI is up by 2.6%. Revenge tourism seems to be the thing there. Summer bookings running at higher than 2019 levels, and so that seems to be well received by many analysts, at least, giving this a positive take, not all. The pound is at 121.95. Matt, to your point, dollar weakness, pound strength, euro strength. It's a dollar story, perhaps, really, but we also had some data out from the UK here, which continues to confirm the tightness of the labour market. 3.7% is the rate of unemployment we have here in the UK, and if you exclude bonuses, we're talking about a rate of wage growth that came in higher than had been anticipated. That's something that is certainly on the Bank of England's radar. And here's Brent crude, 85.81. Things in the mix here. We've seen, of course, that announcement from the US government about the Strategic Petroleum Reserve. They are releasing, even if they hadn't really wanted to right now, having to release some because it was pre-planned. But we've seen that in the mix, but also they didn't have too much of an impact on prices, to be fair. We've also heard from the UAE energy minister then, Matt, talking about how they are pretty happy with the level of production from OPEC+.
Right. The concern is that that just reduces the amount we have in case of emergencies or in case some political party needs to win votes. So they wanted to avoid that, but there was a 2015 law that forced them to continue to sell off the Strategic Petroleum Reserves. Let's get, though, over to Japan right now. That country has officially nominated Katsuo Ueda to lead the BOJ, a move likely to pave the way for a gradual paring back of the central bank stimulus. Aisuke Sakakibara, former Japanese vice finance minister, he is more easily called Mr. Yen, spoke with Bloomberg on what to expect from Ueda's leadership.
He may change his policy if the Japanese economy gets overheated, which is expected at this moment. He might, be in a position to tighten the monetary policy rather than continuing to ease the monetary policy.
Paul Jackson is Bloomberg's economy editor for Japan. He joins us now live from Tokyo. So, Paul, thanks so much for coming on the program. How quickly are we expecting the change to come at the BOJ? I know Mr. Yen's forecast had to do with rates being raised by the fourth quarter.
Well, that's the key question everyone wants to know. We do expect eventual change during his 5-year tenure, but the comments that Mr. Ueda made on Friday when the news kind of broke that he was going to be the surprise choice to lead the central bank, the yen strengthened sharply to about 129.81, and he came out with a comment saying that current BOJ policy was appropriate and stimulus was needed to continue for the time being. So, that doesn't sound to me like someone who's in a terrible rush to change or pivot on policy. So I don't think he, in his first meeting at the end of April, I don't think that's presuming, of course, he is confirmed by Parliament, which we expect. I don't think he's going to come out all guns blazing like Kuroda did 10 years ago when he fired off his bazooka stimulus. I think he's going to be a more kind of thought-through process.
Okay, yeah, there are certainly a lot of different views on this, aren't there, Paul? We talked to a guest from Union Bancaire earlier who was saying they do think there will be some movement in April. Others, such as Mr. Yen, saying no movement till October. We have a guest coming up later in the program who says any moves will be really gradual anyway. Now, what more do we know about Ueda, or when will we know more? I know he's going to be facing parliamentary scrutiny on the 24th of February.
That's right. So he's going to be quizzed on all his views then. So I think we'll get a better idea as to, whether he's hinting at change to come quickly or not. Of course, one of the really difficult things with this is they've got this yield cap in place. They've got speculators fighting against this yield cap. Is that if you give a hint that you're going to do something, then that's going to invite a whole wave of speculation. So how much kind of forward guidance can you give on change to come? So you might have to have a kind of surprise move. And if you remember, we did see in December the BOJ throw a surprise at us. And we also saw how that jolted markets globally.
Paul, thanks so much for joining us. Your evening time. Paul Jackson reporting live from Tokyo for us on the Bank of Japan confirmation. Now, sticking with, in a way, central banks, at least something that they're going to be watching very closely. Today's U.S. CPI report is expected to show costs rising briskly from the prior month, indicating the path to price stability sought by the Fed will be bumpy. Valerie Teitel, Bloomberg Markets reporter, joins us now for more. So, Valerie, we're looking for 6.2%, still better than what we saw the month before, but still, I guess, too high for the Fed or any central bank around the world.
Yeah, too high for the Fed, but really the attention's going to be on these month-on-month numbers, Matt. The pressure on these data prints has just gotten so gigantic, we're even going to care about the second decimal place on these month-on-month numbers. Now, the core month-on-month and the headline month-on-month are expected to show some tick up from last month's print. I want to note that Bloomberg Economics sees a risk that these prints can come in hot today. That's driven by energy inflation, driven by slowing growth of disinflation in core goods, and a pickup in services inflation. But look, I had some clear excitement this morning when I found out I could now officially chart core services ex-housing inflation. Bloomberg has now made these tickers from the BLS data set. This is where my eye is going to go, Matt. Powell has spoken extensively about this component of inflation, that's core services ex-housing. It creates 56% of the core print, and his worry is that a tight labor market could keep this sticky for too long.
Okay, you have to get in touch with the Fed chair. Send him the tickets. I'm sure he'll be grateful, Valerie. Now, President Biden is said to name Vice Chair Lael Brainard as his top economic advisor. Is that going to leave a hole at the Fed? What does that mean?
Yeah, that's the big concern. She's long seen as the top contender for this White House post, but it goes without saying she is the most influential dove at the Fed. She sits within Powell's inner circle, and she helps set the agenda for their policy meeting. When she moves on, who is going to replace her? It's going to be likely someone without her caliber and without her influence. Biden is to nominate her successor, but it's unclear who and it's unclear when. She has been previously considered for Treasury Secretary and the Fed chair by Biden recently, but she was passed over. The speculation is that she would take this role on the Economic Council. And if Biden wins re-election, she could be up to succeed Yellen as the secretary chair in the future.
All right, very interesting stuff indeed. Valerie, thanks so much for joining us. Bloomberg's Valerie Teitel there with a look at CPI as well as possible new role for Brainard. Don't miss our exclusive interview, by the way, speaking of the Fed, with the Richmond president, Tom Barkin. That's right after the CPI report at 9:30 a.m. New York time, 2:30 p.m. in London with our own Michael McKee. Now, to a Bloomberg scoop, Tesla workers in Buffalo are launching a unionization campaign. This could be the first union at the EV maker and a new blow for the CEO, Elon Musk. Joining us now for more is Bloomberg's Global Autos editor, Craig Trudell. So, Craig, what does Tesla do in Buffalo, and what does unionization mean for Tesla Buffalo?
Yeah, this applies specifically to data labeling folks at Tesla's Buffalo facility. This is famously where they do work on solar products, and actually has been, kind of a controversial facility for them in the sense that they really needed to hit certain employment numbers in order to sort of, receive some of the state support that was lined up for them to build the factory there. It took them longer than expected to reach that. And it's also interesting, just this unionization drive in light of the fact that there have been some job cuts to specifically these types of workers recently. This is something that the company is trying to automate over time, and no longer have as much human involvement in labeling the data that they use to sort of improve and build upon autopilot and the system that they market as full self-driving.
Yeah, interesting. Watching the automation of the autopilots, which is what we're talking about here. Good morning, Craig. So today's big take story also talking about the auto sector, talking about car prices at record levels, the shift to EVs. How is that impacting on pricing? What's driving auto pricing at the moment?
Yeah, great story from David Welch and Keith Naughton in Detroit. This is a story that, is a few years in the making. The semiconductor shortage obviously playing a big role here, but I think interestingly we've heard CEOs, Mary Barr at GM, Jim Farley at Ford, talk about the idea that this is going to lead to lasting change for the industry, that they're going to be more disciplined in terms of inventory. This has always been an industry, and particularly for the Detroit car makers, where you've carried a lot of inventory that's led to carrying costs for you and your dealers. And a lot of discounting has affected the profitability of these companies. I think there's some skepticism as to just how long that actually will last, that discipline. But absolutely what we've seen really since 2019 is car prices just skyrocketing, and we've captured that in a really detailed way.
Yeah, a very cool story indeed. Craig, thanks so much for joining us. Craig Trudell there. He leads our global autos coverage. And shout out to David Welch and Keith Naughton for writing that big take story. Highly recommend you check that out on the terminal. In other autos news, by the way, out of Detroit, Ford plans to cut 3,800 jobs. Actually, I should say this is for European jobs over the next 3 years. Workers in the UK and Germany will be the hardest hit. It's the latest sign of industrial disruption caused by the shift to electric vehicles, and that has a lot to do, that shift, with the big take story as well. So all of it tied in together. Highly recommend, again, that you check that out. Now let's get a look at some of the stocks, other stocks that we're watching in pre-market trading this morning. Palantir is one of them. The technologies, the data analysis company that was co-founded by Peter Thiel, said it earned 1 penny per share during the fourth quarter under GAAP accounting. So 1 penny doesn't sound like a lot, but number one, it beats the expectations of a loss by an infinite amount. It also is the first time that Palantir has ever posted a profit for a quarter or a full year. So first ever profit. They say they're going to post a profit for 2023. As you can see, the shares are up 17% in the pre-market trade. Also, speaking of solar, we were talking about what Tesla does in Buffalo. Solar Edge, which makes inverters, and had profit and revenue that both beat analyst estimates by a long shot. And Bloomberg Intelligence says the fact that they're growing so quickly, faster than most of their peers, means that they may raise their full year forecast for 2023. And nonetheless, the shares are off 5% in the pre-market. They've done pretty well so far this year. They're up 10% year to date, and they're up in the past 12 months more than 20%. So maybe there's a little bit of buy the rumor, sell the news going on here. Anna?
Interesting pre-market movers there. Coming up on the program, we'll get back to the macro. Azhar Hussain joins us, head of global credit at Royal London Asset Management. How are credit managers preparing for that CPI print out of the US later? We'll talk about the big BOJ announcements as well. We'll talk to Shigeto Nagai, head of Japan economics at Oxford Economics. What is the expectation around the new governor? Plus, Northvolt joins a host of European companies putting Brussels on high alert over the lure of massive US green tech incentives. CEO of Northvolt, Peter Carlson, told Bloomberg why the Swedish battery maker would benefit from producing in North America.
If we would start tomorrow building a factory the size of Northvolt up in Skellefteå, fully built out in North America, to be ready by 2026, between 2026 and 2030, we would be looking at somewhere between $7 to $8 billion in these credits.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing when we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller in New York with Anna Edwards in London. Now, traders are preparing for an inflation print with hedging the downside possibilities against the downside possibilities on the S&P 500 right now. Of course, if we get a print that's stronger than the 6.2% that is forecast in our survey, you could see a real hit to risk assets. If we get a print that's much lower than that, we could be off to the races. Joining us now to talk about both of those possibilities and what Wall Street expects in terms of reaction is Denitsa Tsakova, Bloomberg cross-asset reporter. So, Denitsa, what do you expect to see given either outcome?
Yeah, for sure. So as you said, we've seen a big spike in hedging, especially the cost of hedges against a 10% decline in the S&P. And this kind of makes sense with how big of a move we've get. But as we've said many times last year and apparently this year, this is one of the most anticipated prints because we've seen 3 consecutive prints that showed disinflation and falling inflation. This time, actually, it's expected for the print to come a little bit hotter than previously thought, 0.5% monthly increase, which will be the biggest in 3 months. What are traders expecting? Like, we've seen some significant repricing in terms of Fed funds rate. That 5% terminal rate is more expected than it was before. If we look at break-evens, they've definitely repriced higher. We've seen hedging. If you look at 2 years Treasury yields, they've been soaring over the past 2 weeks. And going back to that motto, we may see really big price swings today. We can go up to 3% if we see much cooler than that 6.2% annual increase. But we can really go for a big 3% slump if the print comes hotter than expected.
And Denitsa, the reason this is so in focus is there's precedent for this. You know, we often see big moves in risk assets on CPI day. That's been a trend of late.
Yeah, it's been indeed the trade. What is different lately is that jobs report, which kind of changed a lot of things for investors because everything was moving in a trend. You know, the job market, there was disinflation, and now everyone's like, can this lead to higher inflation? Also, obviously, gasoline prices have been a big factor. We've seen used cars, and a lot of investors are worried. But what is different this time is we are obviously at a low positioning, but we're not where we were in mid-October. Like, bets were very bearish, there were big short bets, big underweights, and of course, no one is bullish now, but there isn't the force for that much big of a short covering, which actually may be bad for markets, because before we saw trend followers coming in, buying into the rally, and this may be missing this time.
We'll see what happens. Thank you very much, Bloomberg's Denitsa Sikova. And for more market analysis, MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
Breaks. No one covers the world like Bloomberg.
The return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt, with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Sell insurance or something?
Welcome back to Bloomberg Surveillance Early Edition with Matt Miller and Anna Edwards. Coming up on the program, we'll talk about what to expect from the inflation print out of the US later today. Azhar Hussain joins us, head of global credit at Royal London Asset Management. If we get that hot number driven by energy and services, what does that mean? If we factor in a higher rates environment, what will that mean for corporate credit? Lots to discuss. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. It's official. Japan's government formally nominates Kazuo Ueda to lead the BOJ, paving the way for a shift towards more hawkish policy. The yen gains. Countdown to US CPI. Investors positioned for today's crucial inflation report, while President Joe Biden is poised to name Lael Brainard as his top economic advisor. And automakers used to run plants at full tilt and sell cars for deep discounts. Now they're keeping inventories tight and prices high. You can read all about that story in today's Big Take. I'm Anna Edwards in London with Matt Miller in New York. And Matt, it is inflation day. We're working our way towards that. I was going to say not much big move, but we got decent gains actually on European stocks this morning.
Yeah, and we had some pretty big moves in the markets, U.S. markets yesterday. It was really interesting on a little bit lighter volume than you typically see, moves of more than 1%, or gains of more than 1%, I should say, on the Dow, the S&P, and the NASDAQ. So investors took some data they got from a New York Fed survey showing that consumers aren't expecting wage growth, aren't expecting higher inflation a year out, and bought the market and bid it up to 41.37 on the S&P. You can see we're higher in futures now as well, 0.2% on S&P futures, the E-mini contracts to 41.55. So investors continue to bid this market up into the data that comes out at 8:30, which is in just 3 hours time from now. The U.S. 10-year yield coming down, so investors are buying some of those bonds. The yield is lower than it was at this point. Yesterday we saw it, I think, 373. Right now we're at 369.40, and you also see some dollar weakness, which should be good for risk assets as well. So the Bloomberg U.S. Dollar Index coming down as the greenback falls against the yen, the pound, the euro, you name it. Bitcoin is also gaining against the dollar. Right now it's still under 21,000, but it's up 188 bucks to 21,819, and it has been a real risk indicator. So it looks like risk on until we get that number, of course, and then it's anybody's guess, depending on which side of the survey it falls. We're expecting 6.2% at 8:30. If it's more, we could have a problem in terms of risk assets. If it's less, we could be headed further higher. Take a look at some of the pre-market movers. Palantir is a giant gainer in the pre-market. It is the data analysis company, the big data company founded by Peter Thiel. Said it earned 1 penny per share in the fourth quarter. We were looking for a loss like every other quarter in Palantir's history. They've never posted a quarterly profit. So this is the first quarterly profit. They say they're going to have a profit for the full year, and as a result, the shares are up almost 18% in the pre-market. Now, SolarEdge is a different story. This is a $17 billion solar inverter for solar panels. It's one of the leading companies in that area. Bloomberg Intelligence says it's growing faster than its peers, faster than the industry. It beat on profit. It beat on sales by a long shot in both cases. And it has a higher than anticipated sales band forecast for 2023. Nonetheless, the shares are off 5%. So maybe it's a case of buy on the rumor, sell on the news, because this is a stock that's done pretty well year to date, up 10%, and over the past 12 months, up 20 to 25%. So it's been doing quite well, and now it's selling off. Anna, what do you see in terms of European stocks right now?
Yeah, doing quite well, I suppose, here on European stocks then, Matt. We're up by 0.5% on the Stocks Europe 600. Pretty broad-based, most sectors in Europe in positive territory. The telecom sector doing really well. Vodafone is a big player in that sector and leads those gains, or at least is near the top of the pack, up by 4.1% right now. Liberty Global taking a stake in Vodafone, saying they don't want to go for a full bid, but this does put pressure on the company to shore up some of the management changes and decisions they need to make. The pound at 121.93, up by 0.4%. Matt, as you were saying, this is really a lot to do with dollar weakness rather than necessarily pound strength, as we see the yen and the euro also gain. But we've also had some jobs data out from the UK. We get inflation data this week from the UK as well. The job story is still showing very tight labour markets, 3.7% unemployment, and wage data excluding bonuses that came in ahead of estimates. Brent crude at 85.62, down by 1.1%. We've had a release from the SPR. That's part of the story. But we spoke, our colleague Manus Cranny talking to the UAE energy minister, saying he's happy with where OPEC is in terms of production right now, Matt.
All right, we will keep a close eye on Brent and the other commodities right now. But, of course, CPI is front and center today. Joining us to talk more about that is Azhar Hussain, head of global credit at Royal London Asset Management. And Azhar, of course, this touches credit assets around the globe, what we see from U.S. inflation today. What are you expecting, and how important is the number?
Well, it's going to be a very noisy number, unfortunately. So I think we might have a bit of an overreaction. I think what we kind of have to take a step back and say, look, inflation's down quite considerably from where it was. And interest rates are much higher than they were as well. I think that direction might have a bit of a blip. I think, I don't think we're going to get to 2% in a straight line. And in fact, I think, the market's probably got a little bit ahead of themselves in the last few weeks in thinking that we're rapidly deflating away. So I do expect a bit of a re-blip, in terms of us, whether it's in this number or whether it's next month's number. I think, there's enough data out there that we're going to probably stabilize at a slightly higher level, which ultimately means that the Fed are going to have to stay higher for longer.
Yeah, Azhar, very nice to see you. Thanks for coming in today in London. So you say it's going to be noisy, and a lot of people focus on, we might see a slowdown in the rate of decrease in inflation, and maybe that'll provide some reason for caution. I know JP Morgan were putting out some numbers about what kind of stock gains or selling we might see as a result of various numbers on inflation. What do credit markets look like then in the face of, say, higher than 6.5% or lower than 6%?
I think on a similar sort of magnitude, I think we could get a 20 or 30 basis point move in high yield markets, either direction based on the number, which is quite significant. But then again, if you just dial back 5 or 6 weeks, we've already tightened quite considerably from the beginning of the year. So we're still going to be the absolute yield is going to be much lower than it was at the start of the year, and spreads are still tighter than they were at the start of the year.
Yeah, and in terms of that, it's high yield spreads, I know, and you said in your notes, look quite tight if a recession hits. I don't know whether you think that we are going to see a recession, but if we are, what should those high yield numbers look like, or what are they telling you we are going to see on the recession side?
And I think what it's telling you as well is that the recession, the nature of the recession that will hit is going to be very different from the recessions we've seen over the last decade.
Because of relative balance sheet strength, is that the differentiator?
Absolutely. The underlying is very, very different. The composition of the market is very different. It's a much larger market, but these are much bigger companies as well. So that means ultimately, I think, what really matters, defaults are going to be lower. And that's really significant because, if you dial back a year, people were forecasting high single-digit, even double-digit defaults possibly in the high-yield markets. I think that number's going to come as low as 3% possibly this year, but certainly low single digits is where it's going to come.
It brings up an interesting question, Azhar, and I note that you studied economics and political science at the LSE. on the other hand, as a chartered accountant, you adhere to really fundamental, kind of bottoms-up research when it comes to picking credits. So what do you make of this kind of macro-driven world? It seems that central bank policy is the only thing that matters right now.
I think it's always been the case. Macro does drive fund flows, and the technicals are very significant ultimately. And we're going to get volatility along the way because of the technicals. But over a sort of a longer period, and that what I mean is 12 to 18 months, the fundamentals usually shine through pretty quickly, particularly in credit markets, because what you're really, particularly in high yield, you're really trying to work out, is the company going to make it or not? Or are you going to get your bonds paid back or not? And that's why that default rate really matters, and what that future default rate looks like. And that's where you can have a lot more confidence by just digging into the composition of these markets from a bottom-up perspective, because they look very different to what they did even 10 years ago.
Okay, so this is a different kind of recession, even if we get one, and a lot of people think we might not. Let's leave it there. Azhar, thank you very much. Azhar Hussain of Royal London Asset Management, thank you for bringing us your thoughts. Coming up on the programme, we'll talk about Japan. Shigito Nagai joins us, head of Japan economics at Oxford Economics. What does he make of expectations around Ueda, whether he really is going to be as hawkish as perhaps this knee-jerk reaction in the markets had suggested back on Friday? We'll learn a lot more this month. What does he have to say? This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Chairman of the Federal Reserve is obviously an important job. What do you do to relieve the stress other than interviews like this?
As you know, I like to ride my bike.
I say, is that safe, riding a bike?
It's safe if you stay on the bike.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Now, the Japanese government has formally nominated Kazuo Ueda to take the helm at the Bank of Japan. The university professor and former BOJ board member will take over from current Governor Haruhiko Kuroda when his term expires in April. Joining us now from Tokyo to talk about what this means for the bank, what this means for financial assets, is Shigeto Nagai, head of Japan economics at Oxford Economics. And Shigeto, thanks so much for joining us. It's interesting as we see the yield curve control starting to loosen, that we get a new name here. What do you expect in terms of how he carries forward Kuroda's policies?
I think he will try to adjust the current easing framework in order to reduce some side effects, and especially this YCC policy. But at the same time, it is important to know that Ueda-san will also continue the ongoing, very accommodative monetary policy at the same time.
But the interesting thing is, well, you would think that this yield curve control policy is too aggressive, and I guess the Kishida government as well is concerned about side effects. Maybe Ueda is as well. So do they agree, the government and the BOJ, on a mission and go forward with Ueda?
Yes, I believe so. I think the recent nomination process shows that Kishida administration is really determined to make some adjustments to the current framework, especially on this YCC front. I think they will somewhat make adjustments to allow the JGB market itself to formulate the yield curve in the coming period.
That's interesting, Shigeto. It's Anna in London. Good morning to you. Interesting, you're talking about then tweaking yield curve control, not moving away from it. And there are some people who are expecting much more radical change. Why do you think there isn't the appetite to be more radical on that front?
I think it's more likely that they will somewhat widen the band in the coming period, in a relatively near future. But at the same time, I believe they will keep a certain range of band, because the coming process of exit from the, especially QE policy in the coming period, is very sensitive and a very delicate process. So the governments, the last thing they would like to see is the market disruptions caused by this exit policy. So they will keep some safeguards of the defense line in this long-term yields. That's my view.
Okay, so it's a delicate process. Market disruptions are possible, of course. I wonder what the underlying inflation dynamics look like, Shigeto. And if we are seeing a very pragmatic BOJ governor who's going to make decisions based on the underlying economics, where does that underlying economics steer us? Because I was looking, my colleague Mark Cudmore drew this to my attention, so many different measures of Japanese inflation, some of which suggest that inflation has really overshot the target, and other measures, if you exclude if you exclude all food and energy and drink and all kinds of things, suggesting that we haven't hit the targets yet. So what's your assessment?
I think the current overshooting of inflation is just transitory, and the inflation rate is projected to decline, especially in the second half of this year and the year next, simply because the wage developments will continue to be stagnant, and because of this weak demand, the company haven't really regained their pricing power yet.
So in terms of the effect this is going to have on global assets, Shigeto, I wonder if it's just going to continue to draw money back to Japan. That's what we've seen in the recent past, and I know that Japanese investors have, for example, more than $2 trillion invested in global bond markets. Do you see that continuing?
I think what we will see very likely is that some adjustment in the long end of the yield curve, say the 10 years yields could rise, say, close to 1% or 80 basis points. But the important things to note is that Ueda-san will continue a very accommodative monetary policy by maintaining short-term policy rates at around zero. Even if they get rid of negative rates, the rate will remain very close to zero because of these stagnant demand conditions. So there's going to be a little difference to interest rate differentials internationally, which really determine the global capital flows. That's my view.
What does it mean for the very popular carry trade? Is it going to continue to be possible for hedge funds to fund their bets by selling yen or selling JGBs?
I think Japan may regain its status as a kind of global funding currencies for taking risks globally, because Japan will continues to be the only country with nearly zero interest rate in that sense. I think this kind of carry trade trend will come back, and Japan will continue to be the source of global liquidity funding, I guess.
Okay, so not such change expected then, perhaps, on that front in terms of continuing to be that global funding currency. What about the style of Ueda Shigeto? What should we prepare ourselves for? This is someone who I know Larry Summers has described as the Japanese Ben Bernanke. I mean, they have some education and some training in common, I think. How should we expect to see him communicate with global markets?
I think he's well experienced because of his background. So he will make a kind of comprehensive review of the current policy, taking at least a few months, and trying to explain all the changes using his own words. And I think the most challenging is whether the financial market pressure will allow him to take such a long time. And I think that's where it's possible widening of the band of the YCC target will come earlier than this formal decision after comprehensive review.
Shigeto, thank you very much. Shigeto Nagai of Oxford Economics, thank you very much for giving us your thoughts. Coming up on the program, US inflation data is due at 8:30 a.m. New York time. Of course, we've been talking about that a lot. We will get a further preview of what we should expect next. This is Bloomberg.
Somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now, a look ahead to what is ahead today. At 8:30 a.m. Eastern Time, we will get that crucial US CPI report. The report comes as several officials from the Fed hold speaking engagements today. We heard from one overnight from the Fed's Bowman, of course. Now, Richmond Fed President Thomas Barkin speaks exclusively on Bloomberg TV at 9:30 a.m. Dallas Fed President Lori Logan takes part in a moderated discussion at 11 a.m. We will also hear from from Philadelphia Fed President Patrick Harker and New York Fed President John Williams wraps it up with a keynote speech at an event hosted by the New York Bankers Association. So if the Fed then, Matt, wants to give a different message to the markets, if it wants to throw in a new interpretation of the CPI trends, it will have ample opportunity.
Yeah, well, absolutely. And it'll be great to hear from Barkin a little bit later on. I believe that is an exclusive interview. So actually, I have the person who's going to lead it to ask here. Michael McKee joins us on set to preview the CPI report, to tell us what questions he's going to ask Barkin. He's Bloomberg's international economics and policy correspondent. Mike, I guess first of all, what do you expect from this number? What are investors going to be paying most closely attention to?
Well, it depends on where you're sitting, what you'll see. The average person, and maybe many on Wall Street, are going to look at the year-over-year numbers, which are going to come down and show continued progress on inflation. The Fed, though, is going to be focused on the sequential changes month over month to see if we still are making progress, and there the news is going to be more disappointing, with headline going up 0.5%, according to the Bloomberg Consensus Survey, and the core going up 0.4. They had already been revised, and this is something people may have missed. Seasonal adjustment changes made by the Bureau of Labor Statistics pushed both of those up 0.1 and into positive territory for the headline number for December from a negative, and the core rate was raised as well. So we're coming at it from a already higher inflation level. Now, a lot of experts say that'll wash out over the coming months. So has that gotten into the market? That's the question. Do people think that this is going to get better, or are we going to see a surprise reaction?
And what are we expecting to be the reaction, Mike, good morning to you, from the Federal Reserve? Some people are linking the fact that we didn't see the Fed really rattled by that hot print on jobs, and therefore suggesting that maybe that dulls any assessment of the link between a beat on inflation and higher rates. What's your thinking about the sort of Fed reaction if we did get a hot number?
Well, what analysts are saying at this point is that inflation is going to come in hot for the month of January. It's not related to higher wages and probably not as connected to service industry prices as the Fed worries about. So they'll anticipate a reversion in February and see it come back down a little bit, which probably means we'll generally hear from the Fed today what we've heard from them before, the idea that they are going to raise rates a couple more times and they're going to leave them there. I don't expect a major change in policy yet. Now, if we get a second CPI along those lines, we may have a change in their views, but not today.
Valerie wants to know if you're excited about the new tickerization of, what is it, core services, ex-housing. And I think it's interesting, you know, the nuance is interesting, because I got a message from a trader today, Anthony Santos Stefano. He says, maybe we'll see an underreaction because many know the methodology is changing, and they may need time to sort through any murky, abnormal print, which makes sense to me. Everybody's looking at these little nuanced readings, right?
Yeah, it's been a long time since anybody did that for CPI. But the tickerization of this new, what they call super core, which is services ex-housing, is a response to Jay Powell, who has said that right now we think goods prices are going down, and that's okay. And we know that housing prices will go down eventually. Energy prices we can't control, but service prices are made up largely of wages, and if wages are still going up, that's going to push up service prices. So we want to isolate that aspect of the CPI, and so now we're all watching that, and you can bet at 8:30 we'll be talking about that.
And at 9:30 as well.
And at 9:30 we will be talking with Tom Barkin.
All right, Mike, thanks so much. Michael McKee there. Don't miss his exclusive interview with Richmond Fed President Tom Barkin. That's at 9:30. So 1 hour after the 8:30 CPI print, we get Richmond Fed President Tom Barkin coming on to talk to Mike McKee. That's it for Early Edition. Surveillance is up next. In that program, we're going to hear from Harvard University professor Ken Rogoff, among others. This is Bloomberg. Oh, happy Valentine's Day.
biggest challenges for General Dynamics, and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This is Bloomberg.
I think the markets have been mispricing the Fed for a while now.
We don't think the Fed is done.
How high does the Fed need go? It needn't go too high, in part because of the confidence it's instilling in investors and the public.
Effectively, I think what we're seeing is that things are actually improving around the world.
Maybe nothing happens and we just have a plain run-of-the-mill recession. That's my bet at this point, if we have a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Gentlemen, a really important programming notice. 8:30 Eastern Time, inflation. Milan Spurs a little bit later. Don't forget, get it in the diary.
How about the acquisition of the Roses? At what time is that?
Yeah, that's not happening.
Yeah, well, that's like, Fort Knox, you're worn a
There's
bar
a card
gold.
left on the side, and
then that's it.
then that individual goes away on a work trip. So the roses are on sale when they're back. That's good. From New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio. A happy Valentine's Day to you all. Equity futures positive 0.2%. Looking ahead to that inflation data. TK, CPI, just around the corner.
Really, really important, and I think some of the coverage has been off the mark. I really want to make this clear, and I'm going to go to David Rosenberg, who was iconic at Merrill Lynch before running his own shop up in Toronto. Rosenberg used to put down page 3 or page 4 of his must-read all the partitions of CPI, all the individual things. They summed the numbers we're going to talk about at 8:30. But the adults, Steve Stanley of Santander with us at 8:30 before Ken Rogoff, they're going to look at those partitions to try to figure out the vector of the top line number.
Got to talk about a price action coming into today as well. So last week was the worst week of the year on the S&P 500. Then in one single session, Lisa, we took it all back.
This is really the issue, is that people want to buy. There is a melt-up kind of feel, and even the Bank of America Fund Manager survey that just came out shows that, yes, people are more neutral or less overweight on stocks, but still are more overweight than they are historically. So basically, a lot of people still buy what this market is selling
I don't know what to make of it. To me, there's some real negative sentiment out there, and I see it in some of the tea leaves, but you're right. In others, there seems to be not a froth, but not a toxic brew, not a froth, just a, there's just an oomph of optimism.
There's a new most crowded trade over at BofA. If you read Michael Hartnett's note from this morning, it's no longer the US dollar. It's been replaced by long Chinese stocks and long investment grade credit. They're the two most crowded trades right now.
The strategist we had from Voya the other day, Barbara Redfield, was phenomenal on this. Everybody's on board the international play.
We'll pick up on that story, Tom, a little bit later. Let's pick up on the price action now.
Please.
Equities up 0.25% on the S&P 500. No real drama. A lift yesterday. As I say, a lift of more than 1%, wiping out the losses of last week. Yields come in about a basis point on a 10-year, 368.64. Yesterday on a 2-year, 455, the new high of the year since the morning of payrolls Friday. A couple of Fridays ago, Tom, we've had a 40 basis point plus move on a US 2-year.
Look at this, and 82 basis points. Priya Misra wrote this yesterday, negative 82 basis points on that vanilla spread. It grinds, but nevertheless, we get a larger inversion, and I'm hearing from people who've been right on that we have further to go.
Lisa, a real turnaround in the bond market over the last couple of weeks.
Indeed, and let's see if we build on that after 8:30 a.m. when we do get U.S. CPI for the month of January. As we were talking about, Tom really was laying this out. The underlying components are going to be incredibly important to dissect. We are expecting a month-over-month 0.5% increase, and the month-over-month is going to be more important perhaps than the year-over-year, which does show a decline simply because of some of the base effects and some of the compositional changes. What I'm looking for is when you strip out goods, when you strip out shelter, what do you see? Do you see services side inflation really picking up? Also curious about that a used car price aspect. I know I keep talking about this, but car prices are reaccelerating, how that features in. Today, we then get the response from a host of Fed speakers, including Fed President Tom Barkin, who is joining you, John, at 9:30 a.m. on Bloomberg Television. I'm very curious to hear how you tease out what their reaction function is. It's going to be a fantastic discussion. I recommend everyone watch it, as I will. Dallas Fed President Lori Logan is speaking at 11, Patrick Harker of the Philly Fed at 1 p.m., and New York Fed President John Williams at 2 p.m. Is there a growing consensus of 2 25 basis point rate hikes, which seems to be baked into the market at this point? And at 1:15, the view from President Biden. He is speaking in Washington. He's going to be discussing the CHIPS Act. He's going to be discussing the Inflation Reduction Act and more. With respect to the IRA, especially in light of some of the Ford news and others, how does he give a nod to his European allies? How does he give a nod to this idea that it is drawing competition and drawing business to the U.S. at the expense potentially of Europe, John? And I do think that's going to become a growing tension throughout the year.
Lisa, can we deal with the and more piece of what you just suggested? Do we get a Brainerd announcement a little bit later?
Right. So the Brainerd announcement is probably a given. And if you really want to go there, the and more could also be potentially a nod at a 2024 run, right? Because a lot of this is sort of the greatest hits of his administration.
Bramo, thank you. Lisa, on the latest, the day ahead, did you see that? The latest reporting from the team down in Washington, Tom. The Fed vice chair may be announced as the economic advisor, top economic advisor to the president.
Josh Wingrove did an all-nighter on this, and I guess it's poised. And I don't know why are they teasing this out? I mean, I don't understand what the White House is thinking on this. It's not a big deal. She's been there before. She's coming over from Fed, replacement of the Fed. Everybody's talked about it's going to be big shoes to fill. But I just don't get why this is drama. Just announce it.
I don't think it's drama either. The timing's interesting, though, Tom. The day of inflation. The day of inflation.
I will go back to one theory, not my theory, that they're lining her up to replace Chair Yellen at an appropriate point.
Perhaps they're trying to line someone up to replace her at the Fed. And exactly to that point, the fact that CPI is coming out, maybe that's the holdup.
Possibly. We'll talk about it a little bit later. We'll head down to Washington in about 10 minutes' time. Futures are up by 1/3 of 1%. We've had a big move higher in bond yields over the last couple of weeks. Christian Nolting has a big call. Global CIO at Deutsche Bank Private Bank. Christian joins us right now. Christian, I'm not going to bury the lead. 420 on a US 10-year is what you and the team are looking for. What gets us there?
So this is for the end of this year, and I think first growth would come down, but I think looking towards the end of the year, as we don't forecast a massive recession, if at all, I think then we look into 2024, and there's some growth in the US, and that's why 50 basis points higher than now, I think, is absolutely possible from our point of view.
If you have a mandate to be in the market, given that move in yields, higher yields, lower prices, the effect, the linkage to inflation, the effect on equities, how do you participate in the stock market given higher rates and in more durable inflation?
So we agree with that view that inflation is more durable, especially what Lisa was just saying, right? So if you look at the core inflation, if you take out food, energy, if you look at services, we think that's going to be sticky and stay higher. And from that perspective, we look at those companies who are price makers instead of price takers. And if you look at the earnings season right now, you are seeing this already, that they do better, and I think that could stay throughout the year.
If active management is more conducive here, and we're hearing that from a lot of people, including all of the Deutsche Bank Combine, what factors help you choose which stocks to pick?
So it's as always bottom up, top down. So top down, of course, from a macro perspective, which sectors do we like in that environment? Which sectors do bode well in that kind of environment? And then bottom up, you look at the single companies, which I said, where you have probably rather those who can deal with higher inflation better, who are able to do potentially some cost cutting. I think that's the areas where we want to go.
We were just hearing from John as he laid out the recent fund manager survey from Bank of America that investment grade credit is one of the most crowded trades or the most crowded trade. How does your call on 10-year treasuries affect that? Would you lean heavily against that because of the duration component?
Yeah, look, at duration, of course, is relatively high. I agree with that. But I think if you look out in duration, so if you look out of the curve, we don't see massive change there. So, of course, short end will still be inverted from that perspective. I think we have seen quite a rally in spreads. I mean, especially on the high yield side, but also on the investment grade. And I think over the next months, I wouldn't be having this call as well, because we go for lower growth. We will have the discussion, is there a recession or not? From my point of view, that could be a little bit higher spreads. Towards the end of the year, again, that could look differently. But I do expect some volatility in spreads over the next months.
Do you see the same disconnect that we've been hearing about from Morgan Stanley and others between bonds and stocks, with bonds pricing in much more aggressive central bank reaction and stocks basically looking past that and continuing the same playbook of the past 10 years?
Yeah, you talked about flows. I think that's important. So if you look at flows, we've been seeing that stock market rally. The flows have not been, let's say, very supportive of it. I think we have seen kind of a squeeze to a certain extent. From that perspective, I would rather be with the bond side at this point in time and maybe taking some gains in the stock market here. Of course, there is still this fear of missing out. FOMO, yes. But I think if you look what we have achieved so far in performance, I think 6 weeks, which very nice performance. You cannot just say the whole year would be like this. If so, fine. But I think we shouldn't plan for this.
Christian, a little bit later, we get a ton of Fed speak. Literally, they're lining up to comment, I imagine, on the CPI report at 8:30 this morning. Christian, are you going to pay much attention to that Fed speak? Is that important to you?
I think it is important because the market is very much looking into this to get a clue where the Fed really wants to go. Are there more hikes to come? How do they comment inflation? And we have seen that the Fed speak has been moving markets, especially last year as well. So from that perspective, yes, I think it's important to watch, to also get their first reaction on this inflation data, which is coming out soon.
Christian, help our Western audience across the Atlantic, our American audience, with how Germany's coping. John, what's the number, 9% inflation?
It's a 9 handle, yeah.
Christian, I mean, I'm looking back to Willy Brandt and Konrad Adenauer. This is foreign and harkens back to fears of another time. What is the behavioral construct of Germany at this moment of 9% inflation?
Yeah, it's very, very high, right? And if you talk to Germans about inflation, there's always, as you rightly say, looking at history, there's some very bad experience with high inflation numbers. So it's a massive discussion. On the other hand, that's why it's probably positive that the government is supporting from the fiscal side, which has brought down inflation a little bit already. And we think top-line inflation is coming down. Nevertheless, we have unions asking for substantially higher wages, so some in the double digits, so we talk about 10 to 15%. And that, of course, makes inflation quite sticky. So I think this discussion in Germany, in Europe, will continue probably even longer and at a higher level than we can see in the US.
Hey, Christian, great to catch up. Looking for 420 on a 10-year. What a call. Christian Nolting there of Deutsche Bank Private Bank. The CPI data coming out in a couple of hours' time. After that, we'll be catching up with the Federal Reserve. Mr. Barkin from the Richmond Fed. Mike McKee's going to be leading that conversation. I'll just be sitting there, Tom, trying to answer smart questions alongside Mike. But Mike will be the guy really pushing
he gives me questions.
A little bit later.
McKee
gives you questions.
He gives me questions out so I don't embarrass myself.
I just try and work off McKee's questions.
Yeah,
that's what
good.
I try and do. That's the job.
This is
a little
important.
bit later.
Every one of these guys is different on this day of inflation. I think Barkin's a good conversation.
Tom Barkin, an hour after that inflation report. In the next hour, we'll catch up with Anna Hanna, Wells Fargo. Wells Fargo reckon the bear market is over. Anna Hanna coming up.
Yeah, Chris Harvey had that.
In the next hour.
Did it happen?
Looking forward to that conversation. From New York, this is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. NATO Secretary General Jens Stoltenberg says that Russian President Vladimir Putin is far from talking peace and is preparing for more war.
We see no signs that President Putin is preparing for peace. What we see is the opposite. He is preparing for more war, for new offensives, and new attacks. So it makes it just even more important that NATO allies and partners provide more support to Ukraine.
NATO defense ministers are meeting in Brussels this week. They'll discuss spending targets Wednesday. Bloomberg has learned that Turkey plans to resume stock trading on Wednesday. The Istanbul Stock Exchange suspended trading February 8th, 2 days after a pair of powerful earthquakes jolted 10 provinces across Turkey's southeast and Syria. The quake killed more than 37,000 people across the region. Ford Motors laying off about 11% of its workforce in Europe. It's the latest sign of industrial disruption caused by the automotive sector's shift to electric vehicles. Some 3,800 jobs will be cut, most of them in Germany and the UK. The carmaker has reduced ranks in the region by 35% in the last 5 years. In the latest labor challenge for CEO Elon Musk, Tesla autopilot workers in New York State have launched a campaign to unionize. Staff say they want to curb workplace monitoring and metrics. They also want better pay and job security. Leaders of the Starbucks union campaign are helping spearhead the movement at Tesla. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Street prepares for the latest read on inflation.
There's a huge amount of uncertainty out there.
We're going to get some lumpy numbers. Will annual rates continue to fall?
If we get a hotter print, how much does that really take some of the momentum out?
Instant reaction on Bloomberg Surveillance.
The data have come in stronger than expected.
Are they literally making it up as they go?
Plus an exclusive interview with Richmond Fed President Thomas Barkin.
It just makes sense to steer more deliberately.
February 14th might have something to say about that.
Inflation in focus today on Bloomberg.
Even though we had no indications that any of these three objects were surveilling, we couldn't rule that out. And so there, you want to err on the side of safety here in terms of protecting our national security interests. I don't think the American people need to worry about aliens with respect to these craft, period. I don't think there's any more that needs to be said there.
John Kirby, the White House National Security spokesperson, dialing back concerns about aliens.
I think at the Newport War College they didn't have they didn't have planning for that.
If you've not been around the last couple of weeks and maybe you've not been following the news, that's where we're at in the last week or so, Tom. Flying objects and The US military shooting things out of American airspace. When have we ever seen that before?
The first time I ran into David Duchovny was at like a Walgreens or something at 2 in the morning. And he was standing behind me. He was a very, very gracious, very great gentleman. But people, if you miss the X-Files, 30 years ago? Now's a good time to go back to season 1.
Has it been that long? 30 years?
Whatever.
I think it probably has.
See a very young Scully and a very young David Duchovny. The truth is out there.
From New York City this morning. Good morning to you all. This is Bloomberg Surveillance. We may or may not go back to that story in just a moment. Allow me to set up the price action for you. Just going into CPI a little bit later, 8:30 Eastern Time, so about 2 hours and 12 minutes away. Futures up by 0.25%, a pretty strong start to the week, wiping out the losses of last week on the S&P with Monday's session. Yields come in just a little bit by a couple of basis points. That's certainly not been the story of the last couple of weeks, though. Yields higher over the last couple of Fridays. If you go back to the morning of payrolls Friday, I think the 10 years up since then about 30 basis points. The 2-year, Tom, up about 40 basis points since that time.
Got 8 ways to go here. We're going to take a break here from the inflation watch, again with the green on the screen, and the VIX from a 21, almost 22 level yesterday down to 20.41. We're going to pause for a moment. We do this with Julie Norman, who's at UCL, University College of London, Baltimore Orioles fan, expert on American politics as well. And Julie, I want to step back to what you studied years ago, which was there was a very brave woman named Ferraro who took untold heat as a first visible woman in the vice president and presidential derbies. We move on from Haley of the Carolinas is going to make some kind of is Brainerd before Haley or Haley before Brainerd?
That I can't tell
We
you.
don't know. But tell us the span here of how we've become comfortable with women saying they want to be president of the United States.
Well, Tom, obviously so much has changed since the 80s. And I think, obviously we only have to look to Hillary Clinton as a real, kind of breaking any kind of ceiling that there was with having the presidential nomination, now obviously having Kamala Harris as vice president. But it obviously was a slow road. I mean, I would say there were a lot of assumptions about double standards, about different kinds of criteria that women would be held to, and I think were held to for quite a while. And I do think that is changing now. We see very different openness to different kinds of women leadership, and I think we see it in the types of candidates who are putting their names forward now.
In the heat of a Republican primary with what, John, 14 people? Lisa, help me here. 14 people, 12 people
some
running.
Big names potentially as well, Lisa. We're thinking about what, Haley, Pompeo, Pence.
Yeah, big names.
Yeah.
I mean, Julie.
Yeah, it's the irony that it actually
How
gives
is
Trump
she
a
going to
better
be
chance.
greeted by conservative America? I'm not so sure we've moved on. I'm asking you.
Yeah, it's an interesting question, Tom, but I think many in the Republican Party are very keen to show that it is more of an inclusive party than the narrative sometimes projects, whether that's on race or whether that's on gender, other demographics. And so I think there are many in the party who are very happy to have a woman on the stage in the primaries, and will actually embrace that as maybe a positive thing for the GOP moving forward. Obviously, she won't appeal to all voters for all different kinds of reasons, some related to gender, sometimes not. But I do think things have shifted in a way that in either major party now, we can have a female candidate who's taken seriously.
Well, I think British conservatism changed that conversation decades and decades ago.
Yeah.
And since then, what have we had? Thatcher, May, Truss,
You
on
guys
and on and on.
light
on and on
years
and on.
ahead of us in Germany, but I would say, yeah, England is the analog, and we're not there.
Julie, I want to pick up on something Lisa just mentioned in a bit of crosstalk there as we were talking about a packed Republican field. Does that just help the former President Donald Trump?
Well, in a lot of ways it does. I mean, it's almost counterintuitive because on the one hand, it seems like, okay, the party is opening up. There's a lot of voices who might be counter to Trump, different people that people could get behind. But at the same time, the wider that field gets, the more it actually will likely give Trump a bump. We've seen that already in the polls. If it's just Trump and, say, DeSantis head-to-head, DeSantis is usually neck and neck, often leading Trump. But as soon as you even put one additional candidate in there, Trump moves ahead. And the more diversified that field becomes, the more likely it will that he will have a plurality majority. And so that's still very much a factor going into the primaries.
On the other side, on the Democratic side, we're going to get the greatest hits from President Biden this afternoon at 1:15 p.m. Eastern time, as he gives a sense of the CHIPS Act and the Inflation Reduction Act and more. And we will discuss that and more in a second. Are you expecting him to announce a run? Does it behoove him to announce earlier rather than later?
I think we can expect a run at this point, but I think an announcement this soon in would be a little bit premature. He doesn't really need to announce yet. There's not any likely competition to him. I think most Democrats assume he's going to run. He probably won't face a primary challenge. And right now he can, kind of keep coasting what he's doing. And I think a run will, obviously when he announces that, will give a different kind of dynamic. And it's just one that he doesn't need to throw his hat in just yet if he doesn't need to.
We've been talking about how he may also announce Lael Brainard as the next Brian Deese to run his economic council and leave vice chair position at the Federal Reserve. Do you think this is a smart move, not only because she's a highly qualified person, but because of questions that it raises about the Federal Reserve and politicization at a time that's really fraught for the central bank?
Well, it certainly does. I mean, I think there's a couple of things at play here. One is trying to maybe think about what this means for the Fed on the one hand, which, as you pointed out, is obviously getting a lot of attention right now. But I think more of this is just having to do with Biden's own team. They wanted a shakeup. They wanted to move out, not only the economic leadership, but chief of staff and other positions that, just have a different tone going into these next 2 years. And I think we're seeing a little bit more of a shift into individuals who might be better off for Biden going into, say, a 2024 run than he's had in the past. So I think it's a little bit of both at the moment.
Julie, thank you. It's wonderful to get your perspective on these issues, as always. Julie Norman there of the UCL Centre on US Politics. Lisa, the leadership role perhaps the vice chair has been craving for quite a while.
Well, correct, right? That she potentially has more influence over policy rather than fiscal policy rather than just monetary policy. To me, it's not such a question about her role as the next Brian Deese, because a lot of people cross-border, cross-aisle basically say she's an incredibly competent, able person. The issue is, what does this do for the Federal Reserve at a pivotal moment, given that she has a leadership position on the Federal Reserve, and the Fed kind of has a difficult position this year. I mean, it really is facing off with some data that is very unclear. It has to make some real decisions.
So this is highly dependent on how the economy evolves, but I'm a little bit more interested in what it means for the administration than I am the Fed.
Really?
I do think it would be quite interesting, Tom, if we get an economic downturn that people begin to blame the Federal Reserve for, including members of the president's own party, when his top economic advisor might be the vice chair from the Federal Reserve who led some of that effort.
That's a good question. Does she have sort of a tarnish around her with the transitory and then the shift there into a much more hawkish stance? Of course, she was one of the more dovish members and was sort of on the more almost on the edge of dissent, as Tom would say.
There was no dissent.
Well, there was at least a sense that she was pushing back a little bit. Do you disagree?
There was no dissent.
Cumulative.
I can't sit there and say, I wasn't inside the room. I don't know how much pushback there was, but there was no official dissent, and that's all I can say.
But the balance of risks was different for her than the rest of the board, it seemed.
Can I butt in here and say what he's acquiring today if they make this announcement? I had the clearest memories of the late 90s when Lyle, you didn't know if it was a she or a he, out of MIT, and Brainard Riker were writing brilliant policy pieces on labor, multinationals, and jobs that were definitive. And she was a kid. He's bringing into the White House, if he does this, absolutely our _1 academic on the micro theory, the applied economics of labor and international trade. You think we need that with China? Just possibly.
Highly competent individual. Equity futures are positive 0.25% on the S&P 500. We're about 2 hours away from inflation data in America.
what do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. Now, what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Equity futures looking a little something like this on the S&P 500. Important morning for US inflation data just around the corner. Equity futures elevated by 0.25%, trying to build on the gains of yesterday on the Nasdaq, up another 0.4%. Of course, the future of this session highly dependent on the data point, which comes out a little bit later. In the bond market, your 2-year, 10-year, 30-year, a little something like this. Yields lower by a couple of basis points on a 2-year, 4.55 in yesterday's session on a 2-year yield. That's a new high for 2023. Right now, sub 450 at 449.47. 2 hours away from inflation data in America. The big banks have put out their estimates. We've put them all together for you. Goldman and JP Morgan, top of the pack, Tom. So that's Ferroli over at JP Morgan, looking for 0.5% alongside Hatsius. This is month-on-month core. And this is what Wall Street's going to be very focused on in the coming hours.
Got to be gasoline coming back, and everybody's been warbling gaily about used cars. This is one idea.
Well, Lisa's been on topic, on point, and Lisa, you're right to pick up on that point.
Yeah, I've heard that I'm also the life of the party because of it. I will say, though, that it's not just used cars, it's also other cars.
Well, you did say that you were having that conversation over dinner. Used car prices.
I do. Okay, fair enough. And I think it is an important conversation because it's the sort of empirical evidence that shapes people's notions and expectations of inflation.
Not saying it's not important, just wondering about,
my conversational capabilities at dinner time.
With the kids.
Yeah. Take it away, Tom.
We've got an interesting day here to get you to the importance of 8:30 this morning. We're thrilled to tell you Stephen Stanley of Santander will be with us after Michael McKee. And then we move on to Kenneth Rogoff. That means international economics, the dynamics of U.S. inflation. And with Bruce Kasman of J.P. Morgan and Columbia University, we can talk about the linkage of Maury Obstfeld, Kenneth Rogoff, and then on to Bruce Kasman, young Kasman years ago with Obstfeld at Columbia. Bruce, what's so important here about Obstfeld-Rogoff is they attempt to tie it together. What does U.S. inflation this morning mean for the rest of the J.P. Morgan world?
So we're looking for a reasonably high side number with a 0.5 gain on the core. And I think you put that together. And I'd also like to include the January activity data, which have been coming in strong, and we expect it to continue to do so. And I think what it's telling you is this economy is not moving in a straight line down on growth, and it's not moving in a straight line down on inflation. And we should understand that these moves that we saw at the end of last year probably were overstating the underlying shifts in trend. We do think inflation's moving lower. We think it's going to sit this year somewhere in the 3 to 4% range. That's a big positive step. It's not enough for the Fed, and that becomes a big issue as we go forward from here.
What happens to our viewers and listeners' economy if we stick at 3 or 4%? If we get a more sustained, not 2% inflation, what does it mean for GDP?
So first off, we're not believing the economy is sliding into recession right now. We think there's a significant part of the inflation decline which reflects fading supply shocks, which is a positive. We think the private sector, particularly the business sector, is still very healthy. And I think importantly, and this is where we get into the call, we don't think the Fed's trying to kill us. So we do think the Fed is going to lean against this. But even though inflation is going to be above its comfort zone this year, we don't think it's going to act in a way that's going to try and drive the economy into recession. There's obviously a risk that they do that over some point in time. I've been starting to talk about the world as a boiling the frog scenario where you do get recession, but it's later and it's with higher rates than the markets are currently expecting.
Well, let's talk about the nature of that recession, because on one hand, if it's a deep recession, it'll cause cuts at the Federal Reserve and other central banks that fuels the next leg of a rally. That's at least what people certainly believe. But if it's not that deep, is it enough to allow the Fed to actually cut rates from wherever they end up?
Well, let's just start with the first point, which is I don't think we're in recession now. I don't think we're going to be in recession in 3 months from now. And I do think the Fed's going to be under continued pressure to raise rates. The market is looking for rate cuts in the second half of the year. And I don't think you get that unless the economy is tilting into recession. And I think the odds of that are still probably less than 50%. So we should start with that, because I think there's way too much discussion about recession and thinking it's going to come immediately. I think you want to wait for it and believe that it's going to take some time. I do think when the recession comes, probably the biggest thing to realize is it's not going to be like the GFC. It's not going to be like the pandemic shock. And probably the big issue here is whether it's going to be synchronized. The key thing globally, certainly, that determines whether recessions are shallow or not is whether the U.S. is in recession and Europe is in recession at the same time. And I think we have to consider whether or not the same kind of dynamics that are driving the Fed are going to drive the ECB and Bank of England. And right now, it does look like that's a likely scenario.
Bear with me, for this is kind of nuanced, but can the Fed cut rates if we don't go into recession? Let's say we get to what you expect, the 3 to 4% inflation read by the end of the year in the U.S. Is that enough for the Fed to say neutral is lower, let's go lower, and sit there for a while to see how far we can go down?
No.
Okay, then.
No, if the economy is not in recession and inflation is in the 3 to 4% range, you're not getting a Fed that's easing. And quite frankly, I think what's going to happen there is people's estimates of neutral are going to be starting to go up, because you're not going to be getting the damage done to the economy that you would have thought with a high interest rate. You're not going to be getting the disinflation that you had hoped for. So this is a dynamic which is going to keep the Fed high for long. It's going to put pressure on them to keep moving rates up. And I think the basic point is that's going to happen until something breaks. My point is it's going to take time before something breaks. We're not imminently at a risk of going down.
In the meantime, if something doesn't break and people are able to get income, get paid to wait, go into cash, and there still is plenty of liquidity in the system, whether it's because of the Bank of Japan or somebody else, are some of these high rates even inflationary in and of themselves because it gives people more cash to play with?
I think we have income effects which are positive when the Fed raises rates. I think the dynamics of having a higher cost of capital, of weighing on activity, is a bigger effect. But, you know, one point that's really important here, and you're right to point it out, is transmission on different channels is different at different points in time. Certainly over the last year, the rise in interest rates, mortgage rates, has been a much bigger negative than the rise in rates. If we go through a period now where the Fed is raising short rates and long rates aren't going up and the economy is holding up, then I think you do have less damage being done by higher interest rates, and you do have that positive income channel to think about.
Bruce, John and I went back and forth on this weekend, and John was really taken by what Larry Summers said about transitory, and this is a different kind of inflation. You and Feroli write about supply changes. We've come out of the pandemic. We've had supply shocks. So does that mean it's not a Korean War into Eisenhower deflation? Does that mean it's not the fears of the 60s and pre-Volcker inflation, and that it's something different?
Yeah, I think we have to balance here. There's a set of things that damage supply and created huge dislocations in the economy that are now unwinding. The rate of inflation that we got to in the middle of last year is not sustained, and it's coming off, and it's coming off pretty quickly. But I do think we should recognize that we've had supply changes here that are going to linger, particularly labor supply. By our estimates, we've probably lost something like 2.5 percentage points of the labor force over the last 3 or 4 years relative to its trend. And that is not coming back. Also, we've changed psychology. We've probably changed production chains globally on a more permanent basis. And I think in order to get inflation all the way back into the low to mid twos, I think you are going to have to see some damage being done that we would call a recession. thing I think is very different is I think the political economy compared to the 60s and 70s is not tolerant of high inflation. So I think eventually the Fed will do this and will create the dynamic of a recession. I don't think we're going to have elevated inflation the way we had it then. There are supply damages being done, as was the case in the 60s and 70s. We are living with high inflation, and it's going to be somewhat painful to bring it back down.
Tell me about potential GDP then. Well, I think we've had two once-in-a-lifetime ideas. Ferroli's lot on this was sub 2% potential GDP. Do you adjust that given the stimulus, or do you just assume we're going to meander down in a long-term Bruce Kasman way to that shocking Ferroli statistic?
Yeah, well, Mike and I have been working with a potential growth rate in the U.S. which has been somewhere around 1.5%. Basically for the last decade, and I don't see any reason to change those views. There's obviously slowing demographics. We've damaged immigration flow in a more lasting way. The big wild card, of course, is what's happening to productivity. The numbers are really hard to read in terms of trend. I would be agnostic here. I'd say I'm a productivity pessimist, but I don't really feel like I should be sitting here taking a very strong view, and maybe we'll be surprised. We could be surprised to the upside. I just wouldn't bank on it, and that could help us. But again, I'm not sitting here feeling comfortable pushing in that direction.
Hey, Bruce, always a clinic. Thanks for being with us, mate. Bruce Kasman there. Thank you. Of JP Morgan, going into inflation data a little bit later. Just a clarification. I don't quote Summers on the weekend.
You
just
did
never,
this weekend.
Never quoting Larry Summers on the weekend. Antonio Conte, maybe, but, Larry Summers.
It was a transitory moment over lunch. Tell us about this big game today.
Absolutely not.
John, I think for Americans, this is completely foreign. The Tots of London are flying to Milan.
Tottenham, yeah.
To play
knockout
the AC
game.
Milans.
To play AC Milan, not the AC Milan.
Not in the Premier League.
Champions League.
Is that a bigger deal than
It's
Premier
a
League?
European competition.
Is it a bigger deal than Premier League?
For some clubs it is. For AC Milan it certainly is.
But not for the Tots.
I mean, I think Tottenham haven't won a league title for how long, Tom?
Do they play their best players? Because they have one
without
guy
a
that
doubt.
was injured with a knee.
You play your best players.
You play your best,
if you
but
can,
this is like a big deal.
A huge
It's
deal.
not like a friendly.
Knockout stages, huge money if you advance. Really, really
Where
important.
can I watch this epic?
You can watch that, I believe, on Paramount.
Paramount, okay.
Yeah, if you'd like to dabble in that
And
a
AC
little bit later.
Milan did really, really well early, but
and now not so much. Those two teams are not in form, let's put it that way, at all. And AC Milan used to be a giant of European football, and now not so much. And Tottenham were never a giant of European football.
When do we learn who wins the Champions
These subtle
League?
digs that just getting nothing back.
Is Rihanna
I think in May, June time, usually the end of May.
Do the players get upset that they're playing for like 3 trophies? I mean,
no, they want to play in the
and
Champions
NFL
League.
is like 1.
You want to play in the Champions League. Okay. If you're getting transferred to a club and you really have ambition, you want to be in the top 4 team to go into the Champions League.
Come on, more is better.
Are we done here?
Even better, whoever wins, Lisa, gets to go to Disneyland Paris.
Yeah, exactly.
I still don't understand that. Why did Mahomes just fly straight to Disneyland Paris? Is that just like tradition? What's that about? Because didn't Brady used to do that too?
I'm not an expert on Disneyland.
I remember
trips
Brady and Gronk
afterwards.
used to go down to Disneyland Paris.
Yeah.
Not Paris, but
It was like
Orlando.
an endorsement thing. You know.
Is that what it was? It was an endorsement thing?
Oh, yeah, I think so.
Oh, they got paid to go there?
Oh, huge. Oh, yeah, huge.
They couldn't just celebrate. Is it not enough to win the Super Bowl? You have to get paid to go to Disneyland?
They get, when they have their Tang Zero in the morning, they get paid. I don't.
You think that's what they drink in the morning?
Tang Zero.
Tang Zero. Can you imagine if Tang offer you a promotional deal?
Can you imagine?
We'd never hear the end of it.
Yeah, exactly.
I mean, my question would be, have they already? Are you taking checks from Tang?
Mike said to me, Mr. Bloomberg said to me, Tom, you can get paid by Tang if I get paid by Cheez-Its. That's what he said.
Is that what he said?
That's what he said.
I once asked the trademark, good morning. And he said, if we can make money from it, you're not making money from it. Equity futures on the S&P up 0.25%. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. The United Arab Emirates energy minister says supply problems among some oil producers could tighten the market next year as demand rises.
I truly believe that we need more supply in the future. With the increase in demand, the forecast for this year, definitely there will be an increase in next year.
The energy minister spoke to Bloomberg at the World Government Summit in Dubai. Indian income tax officials searched the New Delhi and Mumbai offices of the BBC today. This just weeks after the British broadcaster aired a documentary about the 2002 Gujarat riots and Prime Minister Narendra Modi's alleged role in the violence in his home state. An Indian government official with direct knowledge of the matter described the visit by tax officials as a survey, but didn't give any other information. The supplier of batteries to Volkswagen and BMW could reap billions from President Biden's electric vehicle bill. Northvolt joined a group of European companies putting policymakers on notice about the allure of U.S. green tax incentives in Biden's Inflation Reduction Act. The tax credits included the law cover about 30% of cell manufacturers' operating costs. If the Swedish startup built a similar size factory in North America, it would save about $8 billion in tax credits by the end of the decade. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
Could face bigger challenges next.
It was going to keep rate World Cup. This is a 3.
As the economic picture does. The OK is getting ready to make a decision.
I'm not worried about the demand. I think what worries us is, are we going to have enough supply in the future? I truly believe that we need more supply in the future. With the increase in demand, the forecast for this year, definitely there will be an increase in next year.
That was the UAE energy minister on the energy situation at the moment after a big rally last week in the oil market. Crude up by more than 8% over the week. Here's the tone of things right now. Crude pulling back a little bit by about 1% on Brent, by a little bit more on WTI, down by 1.6% to $78.86. About an hour and 44 minutes away from the CPI report here in America, the inflation report just around the corner, and yields come in just a little bit elevated in the last couple of weeks. We're down a basis point. Your 10-year 368.83, your 2-year through 450 in the last couple of weeks. 455, the high of the session, high of the year in yesterday's session. We break 450 this morning, down a couple of basis points to 449.26. Equity futures trying to build on the gains of yesterday, up another 0.25% on the S&P after delivering a gain of more than 1% on the S&P 500 in yesterday's session and taking out the losses of last week. Some tremendous research out there, as always, this morning from Michael Hart at the team with a global fund manager survey. There are so many juicy tidbits in here. I'm going to pick out one for you. Recession odds peaked in November 2022 at 77%. They've declined to 24% in the past month, and we're down 27 percentage points month over month. So that's a big, big change. And something they point out when you look at the chart, note the prior peaks in recession fears coincided with the start of major bull markets in asset prices. So they've plotted this chart, see all these peaks in recession fears, the one back in November 22, there's one in April 2020, and there's one in March 09. I've had a lot of you write to me on Twitter